Or is it the one that we do shenanigans? Just bring it. It's my friend. We went to school together. It wouldn't work in this industry. And this is what is killing this industry. Our minimum rack must be accepted before we say yes to any credit. The source of the phone, you know, a lot of people just bring, oh, see, I'm the owner of CIBN house. Come and give me money. Is it about collateral? Rubbish. The crux of the matter is number one, capacity to repay. Through what? The income flow, the gestation period of the business. And therefore you move to willingness to repay. Has he done it before? What has he done before? Those are the two major out of the 5 things of credit. And this is what we put in place when we are defining our rack. I even heard that a lot of us does not even know how to calculate half. We waited till the loan matured before we say, the loan is now delinquent. But do you know that PAR must be calculated daily? Every day, not at the end of the month, not at the end of the quarter. Every day, you must know the PAR of the bank, the PAR per branch, the PAR per PM, per your loan officer, per product, every day. Because the microfinance bank is more stringent. It's not about 90 days NPL. We are talking of 1 day NPL. You must be able to do all of this. You must do your vintage analysis. What are the age of the businesses that is giving you problems? You must be able to dimension, do a proper trend analysis and credit modeling that will give you insight to be able to take another decision. These are the things we must put in place when we are talking of credit risk. The next place. And until this is doing well, this one will suffer. Because this one has given you money, you have disbursed it, it is not coming back. What will this one use again? And therefore they are not able to pay salary. They begin to prorate salary. They begin to do this, and you think yourself will not do fraud. They will do fraud. Let's go to operational risk. So you have created problem for God. I have just 30 minutes, that's why I'm rushing. So I don't like this technical problem. So please next, click. Okay. And that's why you will create an operational risk, which has to do with what? People, process, system, procedure, task flow, cash management, branch management, and IT systems. These are the operational risks that must work to support the credit activity and the market risk. If your process, if you do not recruit the right people, you will get problem. You know, all in the name that we are small microfinance, let's give them 20,000 every month. They will deliver 20,000 naira work for you. You said you give them 50,000 naira per month as salary, and you tell them to disburse loan of 1 million. They will lose self-disbursement. Somebody is hungry. You said he should be giving money out. He will take care of his mouth. So most of the loan that you think customers are not paying is to his uncle and his brothers, because you are not paying him well. You give loan to customer, you do not design staff loan, and he will not disburse loan to himself. He will do it to. So if you don't take care of your people, you will have problem. If your processes are not fluid with proper segregation of duties, putting adequate control in places, you will have problem. They will type Mr. as Mrs. Challenges will happen. If your system is giving you problem, please change it. It is not compulsory you should find yourself with a software that you type A and is bringing out B. Your system will be okay. Your process flow must flow very well. If not, you will have challenge. All of these, can you please pick the next? Therefore, at the point of loan application, a CSO has given you garbage. What is going to be out? Rubbish. All necessary information must be captured. If you capture 20 money as misses, you are going to reduce the risk acceptance of a woman, whereas I am a man. Click the next thing, please. and when Mr. Tunde Omodere pay him money, it will be credited to Mr. Akintola's account. Whereas I supposed to be delinquent is one that will be delinquent, and you will not have proper information. So they are all operational. Please can you click the next? And that is where enterprise risk comes in. So risk management is not all about credit risk. It involves every fragment of the institutions. Every fragment of the institution. Definition of risk management, please click. Okay, so it is the unique character of different type of risk. As you are putting more effort on your credit risk, you must put effort on market risk even much more. And greater attention must be paid to your operational risk. It is a process that must be effected by the board entity. It must start from your board. Be involved. And that's why there must be a monthly management risk committee where the CEO or the executive must be there to decide what is the temperature of the institutions. And it must be applied to all strategic settings across the enterprise. And it is designed to do identify potential events that may affect the entity and manage the risk within the risk appetite. Today is not the day of trading, we are just doing overview. I will be talking about risk appetite to provide reasonable assurance regarding the achievement of the entity objectives. Let's put this into cognizance. Please, next slide. I'm in a hurry, I won't be able to explain too much. Okay, and therefore effective risk management involves what? Credit risk, which has to do with defaults to repayment, concentration, there are so many of them, operational risk, people, process, system, external events, fraud, competition, security, regulatory. We have to talk about market risk, liquidity, interest rate, foreign exchange, asset and liability, institutional. Most of us don't even do ESG at all. The social risk, the social mission, the commercial strategy, the reputational and the dependency risk. These are what must be instituted in all our institutions for our risk management to be highly effective. This umbrella must be completed. If not, rain may drain and the institution may collapse. Next. And therefore, effective risk perspective is divided into three. Number one, the regulatory perspective. Whatsoever license that you have today, you need to respect the regulator. Because they are the higher and fire of your institution. And therefore, we must be ready to be compliant with all prudential standards. You know, some of us will say, this regulator there is too much, let me go and register MFI, where I will not be regulated. You will soon find yourself in the market of arrogancy. Because whatsoever the regulator is bringing in, it's not because they want to kill the institution, it's to make the institution better. What is your capital adequacy? Even though CBN said it should be 10%, but you must design a minimum threshold, maybe like 15%. Set a proper tripwire that your capital adequacy ratio is not less than 15% at all times, even though CBN say 10%. Qualitative standards, there are a lot of them. Micro SME, so many standards, I think about 22 of them. You need to measure them on a monthly basis. Where am I? My treasury bill, my OCP, everything. You need to measure them. The quantitative standard. What is your ROE? What is your ROA? What is all those things? You need to be aware. What is your PAR? I wonder many of us are within the PAR threshold of CBN. Some people say, okay, it is not possible. I tell you, it is possible. My PAR is less than 2%, so it's possible. Strategic perspective. What is your risk budget? What is your risk-based pricing? What is your risk limit? What is your risk appetite? How about the volatility of your management? How about the volatility of your earnings? What is your market value? And At what acceptance level do you do your business? Do you have what we call risk acceptance criteria that you know is a good no-go? Everybody know, your underwriter know it, that if your margin is this, will not do this, if this is not this, will not do this. You must create a proper risk appetite. And that will form your strategic decision. They know that, as far as that bank is concerned, they don't do this, this is what they do, this is what they do, this. And finally, we talk about best practices. And that's why we are all here, so that we can learn from each other. What is the global best practices? And that's what we are talking, effective risk management. That's why I need to learn from you, you need to learn from me. I began to call some CRO, and I still want to call a lot of them. We used to have what we call mismarket before. When we get a report, we don't get it anymore. It's painful. If I know your GL, if I know your portfolio and you know my portfolio, you can't take my customer. But I can say, you mean Baba is now 40 billion. How did they do it? 2 years ago, they were just 15 billion. They have grown. And me, I think I am growing. You know, they are high. They close end of the year with a 0 of 1.8%. And I close with 10%. I'm gallivanting. How did they do it? This information is key for all of us. So it is not, I cannot take your customer by knowing your balance outstanding, your power, you understand what I'm saying? This information, let's gather it together. Let's use it to talk to each other, because if you are good, it helps me. If your customer are paying very well and you declare it through credit bureau, and I know it helps the industry to be very, very clean. So this one that you are sitting on your own information, you are killing the industry, you are killing your own institution. Let's open up, let's give out information. This is what I've been calling a lot of CRO, that we need to do this. Let's exchange the idea. Let's do what we call peer review. What is my ROE? What is my ROE? What is this? Am I doing well? Or I'm just thinking, you know, there are some times that you can be in the village, that you are a village champion. You did not know that your guys in Lagos, they have gone far. So let's exchange ideas. This is what we do through global best practice. What are the other regulatory practices? Do we even do training in the country, outside the country? Do you expose your institution to some of these, maybe like training from this Boulder Institute, SAM, and all the likes? Do you know what they call BASU 2 and BASU 3 Accord, the IFRS 9 standard, the COSO, and all other global best practices? These are the best practices that we must bring in. If not, we will be far from effective risk management. Next slide. So, who will help us to implement this? The senior management and the board must be highly committed to risk management. And therefore, in your board, there must be a committee that is dedicated to risk. And they must set appropriate standard, and they must meet at least 4 times in a year. Risk, and there must be management risk committee that must be meeting at least 12 times in a year. Proper report presentation, strategic decision taking, policies and procedures are reviewed, control are damaged. And risk management policy and procedure must be established in writing. It's not in anybody's head. For most prominent with specific objective and targets, there must be a risk appetite dashboard. When we say PAP this, CAP this, everything must be well documented. Clearly defined responsibility for managing and control risk. Who does what? You know, you make your credit officer also your credit underwriter. You are killing the business. Credit risk underwriter cannot go for sales. They should do underwriting alone. Sales people should do their sales, so that there is balance, there is difference between different perspectives. Ongoing employee training is essential. You must expose your staff to training from time to time, both in-house and outside. And let's sponsor people. Each institution has send 33 participants, but this place will not be enough. Some don't even bother to come. We must be ready to test and monitor all our programs and procedures. We will do what we call stress tests. Stress tests, regular report including independent audit prepared, review by senior management and board director. You know, somebody was talking to me and said, oh, are you the guy that is doing intrusion. He said, no, we don't do intrusion. You must do intrusion, you must do penetration testing, you must do a lot of those testing to make sure that your system is intact. Next. Okay, so each institution needs to ensure that there is a risk management system in place. A risk management system is not sitting in risk department. A risk management system is embedded in the entire activity of the bank. And therefore, in each of the branch, you must have what we call risk champion. In each of the department, you must have a risk champion. There must be what we call enterprise risk framework, that where you interview all the risk in each department on regular basis to ensure that things are working according to the defined rule. Every of your policy must be subjected to what we call risk mapping. And from that risk mapping, you are able to bring out all the risks that are incumbent or are inherent in each of their processes, and you identify it and monitor it and attach it to somebody who is monitoring it. You need to use standard definition with organization. We are not talking about publicity now, we don't want to talk. So clear role and responsibility, who does what and when. Strategic plan, policy, procedure, annual plan are developed from a holistic risk management perspective. In my bank, budget cannot be complete without risk budget. It's not possible, because each of them will be subjected to risk review. That we want to do this, or how will we be able to do it? What is going to be the cost of risk? What is going to be the implication of this? You must weigh it. Everyone's responsibility and play a role from the board downward, including your security must be aware about risk. Everybody, there must be a risk acculturation. Everybody must be cultured about making sure that you are taking care of risk in your environment. Next slide. So what are the benefits of effective risk management? Number one is that you are aligning risk appetite with the strategy. You must align your risk appetite with the strategy. All of us, we have appetite. The day you eat food that is not within your appetite, what do? You go sick. Enhancing risk response decision, we must give free opportunity for people to enhance their risk response. We need to reduce operational surprises and loss, and that's why there must be risk forecast. I must be able to tell my institution that in 2024, these are the risks that is going to take place this year. I must be aware. And therefore, when I'm setting my budget, I should know that in January, this problem normally comes. The budget must be this. In February, this is what will take place. You should be able to be aware. And therefore, there is no surprise. We know that this will happen. We are taking care of it. Oh, there's election. What do? You just set your budget without putting election into perspective? Don't you know that there will be 5 days holiday in the month of April? Do you put into your budget and all the likes? We need to be able to manage multiple and cross-enterprise risk. You need to use risk to grab opportunity. For example, if I'm aware that this way is very deep, when I want to come down, I will come through the step. I will jump because I can break my leg. So when I know the problem ahead, I'm able to maneuver. For example, a gallop in your street. Because you have been going to that street severally, if you gallop. So until you know your problem, you cannot grab the opportunity that is available. And risk management will be used in deployment of capital. What are the products that I do in the bank that I must grow? This area don't grow it anymore. Like I said, in my own institution, we don't do consumer lending. I'm always very careful to give money to transporter. There are a lot of, you must identify your own. Agri, sometimes I know the one that I do. I don't do production of agri. I only do input and output. So you must know the product that is working, and the one all ages, I don't do it in Nigeria, I only do it in Apapa. You know, you should be able to sectorize it like that. Know the area that you must deploy capital and the area you must not deploy. Oh, this area, don't go there. This area, let's put more money. Oh, I don't want to give money to all these people that are doing 10,000, 50,000 anymore because they don't pay. They always in fact, when I see the insurance thing, and then they die fast. So all of those things, you must understand it and say, oh, don't let us go there. Go to this area. This is the thing you must know on a daily basis. On this juncture, next slide. This is my conclusion. If you will continue to run your institution, you will continue to run your institution without adequate risk management. It can lead to unexpected and large losses. And therefore, you need to take it very, very serious. Number 2, microfinance and fintech is a risky business. Successful FI are able to identify, classify, and have a framework for managing risk. You must have adequate framework because this business is highly risky. Highly risky. You need to be aware of that. Effective management does not happen in silos. It takes an integrated approach. And therefore, who are the party to risk management? We have the risk management, we have the audits, we have the control, we have the compliance. Each of these must be incorporated in our risk framework because they have their unique vital role that they play within your financial institution. And finally, risk management is everyone's business. Thank you so much. Any questions?
Okay, because of our time, we'll take a minimum of 5 questions. So the first 5 hands up. 1, 2, 3, 4. Okay, so, 5. So who is number 1? Number 1. Okay.
Thank you very much for the lecture. You said something concerning high interest rates can cause your client not to pay your money. I believe recently the CBN have increased their percentage to 4%. So as an NFI, how do you handle that?
Okay, yes, NPR ratio as maybe the last 1 year has grown by about almost 1,000 basis points. Because 2 years ago, NPR ratio used to be around 40%, but today we are 22.75%. And it's a serious challenge that we are having now. You know, prior to now, MFB have been very, very pricey. Is that not so? In that you charge a monthly interest rate of 6 to 10%. Some of you charge 6% per month. Some of you charge 7% per month. I've seen microfinance that charge 10% per month. Now that the NPR ratio has grown to 22.75% per month, now you cannot grow your own by 1,000 basis points. I mean, you want to be charging 15-20% per month, nobody will come to you. So now this is the time you need to build your reputation, to go and look for cheaper funds through CASA, current and savings. You understand what I'm saying? This is the time. Yes, you need to increase your interest rate, but you cannot play yourself out of industry. And that's why I said we need to come together to exchange ideas. If I know the interest rate that you are charging, you know the interest rate that I'm charging, everybody is aware. We play within that industry. You cannot ask me, you that you are charging 3.5% per month, reducing balance, how are you doing it? I will not tell you, I have set of staff that go to look for savings. You know how much do we pay on savings? I will tell you those ideas. That's why we need to exchange ideas. But don't play yourself out of industry. That's number 1. Number 2, if you force them to give the money, they will collect the money, they won't pay back. Because their business will die. I don't know whether I'm able to convince you. Number 2.
Thank you very much. My own is not a question actually, my own is a comment.
Okay.
I want to thank you for the paper. Very rich paper. Well done.
Thank you, sir.
And there are 2 major things that I also want to emphasize on what you said. One of them is this collaboration you mentioned. You know, I said it again. I'm opportunity to be in the commercial banking industry. We collaborate as CROs. We sit down together, do a lot of exchange of thoughts, and it helps us to drive better. So, like you said, I don't see it as a competitive strategy. See it as a collaboration. They are saying repeated. The other point I want to emphasize, the national dashboard, as a risk person, there must be 5, 6, 7, 10 things that keep you awake. And think about all of the time. You know, was mentioning power, talking about the capital adequacy ratio, CL, the liquidity ratio, all those factors. If you take time to sit by this paper, I hope they're going to share the paper. There are a lot in this paper that we can take away. I see them. In fact, if you're talking about commercial banking or even multinational banking, this paper does a lot in enterprise risk management because it touches everywhere. So once again, I want to thank you for the good job.
Thank you, sir. So, sorry, before I take the next question, I want to recognize the representative of the president of CBN. CIBN, sorry, CIBN. So, Mr. Akimarapi, please, and we are your please.
Thank you. Thank you very much, sir. The president of AERMP, Mrs. Taiwo Ige, here represented by the CRO of Progress Bank, the DG of AERMP, Mr. Olainka Odutola, FERP of CIB, who is also a distinguished council member of CIBN. Our special guests of honor here present today, Mr. Francis Agbola, Ms. Elizabeth from CBN, and others on the top table, including our guest lecturers for today. I want to stand on existing protocol and recognize everyone here present. And so I stand here to represent the President and Chairman of Council of our great institute, Dr. Ken Okwara, who is unavoidably absent. He is attending another national assignment, and that's why he's not here. He has said that I should extend his warm felicitation to you, and in his words, this summit is the right way to go. In the words of Alvin Toffler, the illiterate of the 21st century will not be the man who cannot read nor write, but the one who cannot learn, unlearn, and relearn. And I'm happy that the summit has commenced. From the first speaker, the second speaker, I'm sure there's something you have picked that you need to learn new, something you need to unlearn, stop doing, and something that is being revalidated. So I need to continue to do this. And so on that note, I'd like you to put your hands together for our DG for putting this summit together. Thank you. Now this summit is for microfinance banks as well as FINTECs. Now, those two sectors put together, the impact of microfinance and fintech cannot be emphasized because of the impact, the inroads they make. For instance, the bank referenced in Bangladesh, which the keynote speaker mentioned, Grameen Bank. You find out history has it, facts have it that Grameen Bank is one of the largest banks in the world. Guess what? 96.8% of their customers are women. And it is often said that if you want to build an institution, train a man, if you want to build a whole community, touch a woman. And you see what impact that can make touching the lives of women. And so microfinance touches people who don't have access to the commercial banks, those who cannot walk up to the high places, at least for them to have a feel of that. And you see what the fintechs are doing. Sitting in your home, you can transact with businesses, and it makes life easy. And if you put these two together, it's changing lives. But at the same time, as you are changing people's life, your own life should not. And how many times have I received some messages like, thank God for what CBN did and some regulatory agencies, they were going to stop that. That has to do with fintechs. You just see this number is long story like that. Took loan from us, yes, appeared. Please help us reach out to him, and you are wondering the person they are talking about, you don't even know. And then I found out what happened. They said, once your name is on the address list, contact list of that defaulter, you will get the message by default. And why are they doing that? Because the man is on the run and they need to recoup their money at all costs. So you find out risk management, compliance, in terms of regulatory compliance, which I guess we already mentioned, are two things that can pull down those institutions. So organizing this program to encourage us to pay attention on those two things, I think it's very good. And we support it as the Challenge Store bankers, and we encourage everyone at this summit to please pay attention and make this a beginning, because learning in itself, in the words of Socrates, is a lifelong process. It starts at birth and only ends in the grave. So this summit will not be the last we will do. There will be many more summits to go. And then as I conclude, I went to Warri in 2006 or 2007. We had a crusade. This is risk management we're talking about, right? Huh? And then there was this guy who was just walking by. Chakatolukaba, Baka Tota, you will walk. Then, he just touched. Okay, actually, I was standing beside my brother, it wasn't me. It was my brother he touched. And my brother told me that, Mawawala Katakiki. Now, what nonsense is, he did this. You will walk, Pakatosa. He was just something like that. So we laughed at the man and said, idiota. You will walk it. When I'm not late. So no while. Because my brother is based in Ekoma, so I followed him to work. At the end of the crusade, he was supposed to go home. So he brought out, put hands in his pocket, bring out the purse. So I enter the bus and go back to Ekoma. Guess what? At that time, somebody was picking his pocket. That's why he was telling me, you will walk. Truly and really be walked on. God bless you and God bless you. Risk management is important.
Please let's celebrate Mr. Akin Morakino once again. And before Mr. Akin leaves, we want members of the high table to please join Mr. Akin Morakino in group photograph. Okay, and we are trying to make sure we keep to time. So we have here present we have here Mr. JJ Etopidok, retired Director Special Insured Institutes, Nigerian Deposit Insurance Corporation, represented by Mr. Lacha Shunia, the MDC of Infinite Intel Consult, who will be speaking to us in the next 5 minutes. Please, let's celebrate him. Let's put hands together as we have our addresses. Okay, sincere apologies. Please let's just exercise a little bit of patience. We'll be right back and then we can continue. There's practically nothing we can do right now until they are back. Except we want to have some interactive sessions with ourselves. Or is anyone who has something to say, a comment on the last speaker? Maybe you want to share your experience, or you want to add to. No one. Okay, I'll leave us to have some interactions with ourselves. I'd like to hurry them on hold so that we can continue with our session. Thank you. Okay, we'll continue with the question and answer. Number 3, it's not that it's right now. What's number 4? There's a lady here. Number 4, she's also not here, so we'll take the last question.
Yeah, thank you so much. You did mention the issue of sectorizing our risk, and you particularly mentioned your dislike for consumer lending. Can you help us to throw more light on why you so much detest it?
No. I say based on my appetite for now. Who is saying that I cannot do consumer lending tomorrow? I can do it. But for now, I don't have appetite for it because maybe we have concern to grow the entrepreneur. Because what do we call consumer lending is for consumption. You understand what I'm saying? It does not add value to the growth of the industry. But who says we will not do it tomorrow? We could do it tomorrow. So if we know that we have put adequate policies, processes in place. Because a lot of people do consumer lending. I want to talk about consumer lending a little bit. If you are not fully digitized, I will advise you that you need to be careful with your consumer lending. Okay? If you are doing consumer lending with government, public sector, you realize that you are a PEP already. You'll be exposed to political risk. Because each time that government changes, you have to go and bribe one person or the other so that your money can come out. Especially if you are doing public sector. If you are doing consumer lending to general public, I will advise you that you should go and talk to NIS, Lydia, or Remita for proper direct debit, and your system must be very sound. That at the point of view, you must have a proper algorithm. And I have seen the algorithm that some of the FinTech are doing today. Their scoring model is not good enough. They just pick one or two things. When we are designing algorithm, there are a lot of things. You know, we have 2 types of algorithm that we do. We do what we call a backtesting of your existing system to know, divide your data into what we call the bad and the good. And when you divide your data into the bad and the good, you need to look at what are the features of the bad client, what are the features of the good client. You need to design a new algorithm that when you introduce to your system can say yes to this and no to this. So many things. We are not in the trading, we're just exposing ourselves. But there are so many things that are involved. The day I have enough data for consumer, I will do it. But for now, in my institution, where we don't do consumer lending at all, apart from staff. Oh, okay. Sorry, the second question about the sector. I said, even if you are doing consumer lending now, let's say you do public sector lending, you should be able to sectorize it. And therefore, you should know the one that is giving you highest return. And therefore, when you discover the one that is giving you highest return and lower cost of risk, you should channel capital into it. So when you are doing your dimensioning, your data analytics, you must be able to tell you the one that is giving you the best, so that you can channel resources to it. It may lead to you deleting some sector. It may lead to you training your staff about another sector that you believe should have worked well, but it's not working well. A lot of things will come out. That's why you must do analytics each day. It speaks. Analytics speaks. It's not just a data. It should translate into information that will lead to a decision. So many things, sorry.
Thank you, sir. I want to really appreciate your brilliant presentation.
Thank you, sir.
My question now is, little time you're having with us and the other speakers, I want to please employ whether we can get the presentation through our various events.
Okay, so it's not for me to say that. I think the DG will talk to you about that. I've done justice and they have it with them, so I'm not able to answer that question, I'm sorry. The DG will respond to that question. So,
Thank you. Good afternoon or good morning, everyone. I would sincerely appreciate my other today. So my question is directly to the institute. Yes, we've set appetite on par with the regulatory 5%. We want to maintain par, say 0.1 or whatsoever. How can the institution help us, MFBs? We're talking about FINTECH, and with the help of the GIS, you could make unwilling customers. But we can assess it, and yet they're not willing to pay us. And our part, profitability, is being eroded. Thank you.
Okay, so let me quickly respond to this. That's why I was talking about building your reputation. Let your processes and procedures be very, very okay. Do you know that CBN has activated it? They had meeting with about 53 institutions just this month that they want to bring in. So your institution, if it is not involved, then improve yourselves. Because CBN, they are trying to look at your process. They want to be sure they are not bringing in junk. You understand? And that's why they don't want to introduce it to everybody. So they have brought in about 53, not only microfinance bank, mortgage, savings and loan, and MAB, other financial institutions. They have 53, they are selected now. They are already training them. You understand? Because my strength is involved. So I just want us that they are coming. But they are not going to take all of us at the same time. They are going to do it gradually. And until they audit you, and they discover that your process is perfect and clean, they won't give it to you. So that is why all of us must go and improve our standard. Get the right staff, get the right system, get the right process, and before you know it. But before GSI, I'm sorry, I'm not advertising. The product is already in the market. Not in the model of GSI is already in the market. So we already have people that have it. We are using one of it like that. That it is based on BVN. All the account of BVN and the trap is already in the market. I'm not sure if it's as strong as GSI. But start with that one first. You will pay a little money to do it before CBN finally come with GSI. This is the model I want to recommend for now. I mean, direct debit is already in the market. You want me to mention names? So, I don't want to advertise anyone. If you want to come and advertise, they should come and sponsor us.
Okay, thank you very much, sir.
Thank you.
In an era where power seems to be rising due to some circumstances that are very clear and bold to us, chief of them all is the dwindling economic situation of this country. But in all of this, you have told us that your institution's power is below 2%.
Yeah.
That is nice, wonderful, good. But however, we want you in practical terms to tell us how you were able to achieve this. Thank you.
Oh, okay. It's too long. Because you want me to take 3 days to see. Okay, you see, it starts with your rank. It starts with your risk acceptance criteria. How do you select your clients? Who are your clients? What are the processes that you have put in place? In my experience, it's possible that I meet you today and I disburse money to you tomorrow. You know, you even say take 3 months, take 4 months, I don't need it. And yet I still have 98% collection month on month. So it starts with what are your risk acceptance criteria? What do you ask from your client? For example, if I want to obtain statement of account from my client, I don't take hard copy or send it to my email statement of account. I give you a digital code. When I send the code to you, the statement moves from the commercial bank into my system directly, so you can't tamper with it. I trained all my loan officer for 1 month, no, 1.5 months before they ever start working. They stay 1.5 months before they ever start working, and they still go and do 1 month in the bank, in the office, as practical training, and therefore they know how to prepare P&L, they know how to prepare balance sheet, they know how to prepare cash flow, they know how to prepare all those things. So there are things that you have to put in place for this thing to work. And I have a report every day, knowing what is happening to my client every day. PAR is calculated per day per loan officer. So any loan officer, any client that is delinquent yesterday, I know it today, even as the CRO. And therefore, I know who is delinquent. There is daily monitoring. Every day, I tell them the collection ratio. We have collection report, we have portfolio at risk report, we have daily objective, several reports that is interpreted daily that will now move per region, per branch, per loan officer. Each of them are being followed up. These are the things that bring out results. It's just like that. See, it's true. You know, when they are talking of as at 2-3 years ago, maybe my power was about 3.5. But now it's coming down, it's coming down, it's coming down. They say the economy is bad, but people are paying because give money to those who need business. And my loan portfolio is growing every day. Which is because people need money in this economy. I tell you, the industry is very large. Opportunity abounds. But we must be able to identify who really need this money. Do you have adequate process? Are you ready to train? Some of us, you know, when you want to plant, farmer or what? A cash farmer. So, and therefore, if you plant corn, you don't need to dig now. Just do like this and put corn there. And if you grow 3 months, you will harvest, and the tree will die. That's what most of us want to do. We want to make money in the first year, and therefore you are not ready to invest in training, you are not ready to employ a good staff, you are not ready to pay them good salary, you want to make profit in the year one that you start business. It doesn't work like that. But when you want to plant as a cash farmer, you plant cocoa. A cocoa you have to dig very well. You have to wait for 5 years before it ever bring out any seed. You will be investing money every year until after 5 years. When you bring the first seed, say it will not be enough. But the time you start producing, 10 years, 20 years, 30 years, it's still producing. This is the type of institution we must plant. So we must have a proper risk management. A lot of people don't have proper risk management. When I got to where I'm working, maybe we are just 3 or 4. As of today, we have 34 staff in that department. You must be ready to invest. And that's going to give you a result.
Okay, we have the last question. Okay, the last.
Thank you very much, sir, for the insight shared. I just related to what you said, but is a question now. I've worked in the conventional microfinance, a couple of them, and currently I'm working in the FINTECH. Okay. I've used Remitter, I've used Service, I've used Okra, I've tried Lydia, and the challenge is that when you give loans, specific with the FinTechs now, we're trying to solve that problem. You discover that at the point of debit, you trigger the mandates, there is no money in the account.
Yeah, that's correct.
I have kind of advised on other traditional methods that we could use in recovering this money. But of course, because it's FinTech, we cannot believe that technology does everything.
No.
So the question is this: in a situation where we have used various debit APIs and it's not giving us the desired results, what best approach can we use in ensuring that collection increase very significantly? Thank you very much.
Okay, so technology is good, but it's not a magician. You are giving money to a wrong client and you want technology to collect from you. It will never collect. I said it's time for selecting the right client. For me, when I advise you to use direct debit, it is not for collection, it is for recovery. My collection standard still stand, but it's just to increase my collection by just 1%. Maybe because I was recording 97, I want to go to 98. Only when my collection fail, I trigger direct debit. So when I do direct debit with the one that I use today, I don't say collect, I pause it. I use my normal relationship to do the collection. But if my relationship fail, it is then I trigger direct debit. Because I know within me that when I was selecting the client, I have selected a client that have source of income to repay. I'm not giving out money because I have money to dole out. A lot of FinTech just dole out money. Somebody called me from Japan one day. Oh, Nigeria is a big economy. Want to come and start a FinTech? Want to be giving people 20,000? I said, please don't call me. I said, don't come. We'd like you to help us. I said, no, I'm not interested. Because if you give 20,000 to guys, they will take it. I have a driver. A driver in my office has taken money from 17 FinTech. How much is the salary? 17 FinTech. And all you FinTech, you don't even submit your report to credit bureau so that you can be held. 17, and they are not jiving. Do you know that one of the conditions for an institute to be connected to GSI that you have a proper CRM? And that CRM, you have to submit each of the loans that you are disbursing with a CBN code. Those are criteria before you can be attached to the GSI. So selection criteria is the core. Select those who need money. We are not adults. We must give loan to those who actually need it, not to every Dick Canary. If you give out loan to Dick Canary and think technology will collect from you, people see auditor yesterday cannot audit today. If you are not aligning with today's technology, you are gonna. Do you understand what I'm saying? So use the technique that, because even this GSI, people will just circumvent it. If I really want to take away your money, once you give it to me, say I sign GSI, sign Lydia, sign Revita, so you have mentioned so many. I will sign it now. She needs the money. The day repayment is due, I move the money to my wife's account. Will you get anything? So that's why I said select the right clients. Give money to those that have the reputation. Assessment of capacity, assessment of willingness to repay. Once you do that too right, everything is flowing properly. Thank you so much.
The way we just clapped, since Mr. Mario has started somewhere. Thank you. Thank you very much, Mr. Tunde Omagere, for that great session. You know, if my instinct is right, if somebody is just saying within himself, I wish this is a 3-day summit. Legal advisor. Management expert. at E4 and AERMP. It's a good combo, really, today. We have Mr. Tunde Omolere speaking on risk. We have Mr. Orenye, am I right, sir? Mr. Akitola will be speaking on compliance. And then the panelists will be a barrister. So let's see how everything will work together. And then we'll come out with great solutions for our institutions. Also in our presence today is Mr. Bimbo Abioye, the Group MD of FINTECH. You're welcome, sir. Glad to have you here. So please let's make welcome Mr. Laja Shomeron for the next keynote address. Jam your hands together and sit down to the table.
Good afternoon, ladies and gentlemen. A topic job, and I'll be reading his speech, okay? But I must say that being here has actually enriched my knowledge of enterprise risk management, okay? And the crop of people that we have here, truly, I must say that it's a privilege to be here, and this is for free. That's really, I think we should put our hands together for the organizers of this program. For free, I must tell you something. Thank you very much, and then for the sponsors. I'm going to read his speech. Okay. Ladies and gentlemen, good afternoon, ladies and gentlemen. It is truly an honor to stand before you today as a guest of honor at the maiden edition of the Microfinance and FinTech Risk and Compliance Summit, hosted by the Association of Risk Management Professionals. I extend my heartfelt gratitude to the organizers for inviting me to share a few thoughts on the pivotal theme, effective risk management and compliance, panacea for microfinance and FinTech sustainability. As we gather here, it's imperative to acknowledge the transformative power of microfinance and FinTech in driving financial inclusion and fostering economic empowerment, particularly in emerging markets like Nigeria and beyond. These sectors have revolutionized the way financial services are accessed and delivered, and opening doors for millions of individuals and small businesses previously excluded from the formal financial system. However, with innovation comes responsibility. The rapid growth and evolving landscape of microfinance and FinTech bring forth a myriad of risks and challenges that cannot be overlooked. From credit and operational risk to regulatory and compliance complexities, the journey towards sustainability demands a steadfast commitment to effective risk management practices and robust compliance framework. In my years of service at the Nigerian Deposit Insurance Corporation, I've witnessed firsthand the consequences of inadequate risk management and compliance lapses in the financial sector. The fallout from such oversight can be catastrophic, not only for institutions, but for the individuals and communities concerned. The recent collapse of over 120 MFBs and Silicon Valley Bank in the US has a lot to do with failure of risk management in those institutions. Therefore, I urge all stakeholders present today, microfinance institutions, FinTech companies, regulatory bodies, and industry professionals to prioritize risk management and compliance as a non-negotiable pillar of sustainability. Embrace a culture of vigilance where risk awareness permeates every level of the organization, from the boardroom to the front line. Moreover, let us leverage the power of technology and data analytics to enhance our risk assessment capability and strengthen compliance monitoring mechanism. By harnessing innovative tools and adopting best practices, we can stay ahead of emerging risks. There are going to be many, and ensure the integrity and resilience of our financial ecosystem. But let us not forget the human factor. Ultimately, effective risk management and compliance are not merely about ticking boxes and meeting regulatory requirements. They are about safeguarding the trust and the confidence of our clients, our investors, our stakeholders. They are about upholding ethical standards and fulfilling our duty of care to those who entrust us with their financial well-being. In conclusion, just a moment, technology is trying to deal with me here. Okay. In closing, I challenge each one of us to embrace the spirit of continuous improvement and collaboration, which has been mentioned again and again, as we navigate the dynamic landscape of microfinance and fintech. Together, let us strive for excellence in risk management and compliance, knowing that by doing so, we not only ensure the sustainability of our institutions, but also pave the way for more inclusive and resilient financial future. Thank you very much. Signed, Judy Echopibio. Thank you. Thank you very much.
Let's put our hands together for Mr. Lacha showing once again. Thank you very, very much, sir. I believe we're enjoying ourselves this afternoon. And Mr. Tunde Omagere has spoken to us about risk. And next, we're going to have the next speaker talking to us about the opportunities that there are in fintechs. And then the last speaker also will be talking to us about compliance. And finally, we have the panel section where Prof is going to be talking to us on the legal aspect of all of this thing. So our next guest speaker this afternoon is Mr. Sam Okene, SCA, Chief Cyber Security Consultant for Bopin Consulting Limited. So please let's put hands together for him. It's an honor to.
Good afternoon, everyone. I would like to stand on the existing protocol. So I want to say this. I used to be a banker. I was in the banking sector for 23 years. Yes. And my last bank where I worked was United Bank of Africa. I was the Chief Information Security Officer. I was responsible for handling the cyber security for UBA, 20 African countries, UBA New York, and London. So when I was asked to come and talk about how to leverage technology and managing risk, I know the great challenge that both the fintechs, the microfinance banks, the challenges you're facing today. The first speaker talked about a whole lot as it relates to enterprise risk. But I want to say something when it comes to the use of technology. That is where the greatest risk control lies. But they support banks in processing their credit cards, their debit cards then. But what happened? Usually, when transactions happen, when you insert your card, that card is supposed to route to your bank for authorization, for approval. Okay, so banks were also busy securing their system. All right, but the guy at the center did not have commensurate security. Or two, it could be the guy within also, that guy at the center also had personnel that were interested in collaborating with outsiders to do harm. And that happened. What happened was that CTL was breached. So, and then they planned cash out attack from 15 countries in the world. So the opposition is here in Nigeria. Already, they have already profiled the various banks, duplicated the cards. That was when we also had master cards of all the banks that were going to be affected, that supports that go through CPS system. What then happened was that when they breached, it have internal capacity, engage experts to come review and work to review the environment, review your system. Very important. So this organization engaged a team of professionals. We got there for the assessment, reviewing the environment. We did a kind of a control assessment of the environment. We realized that the control environment was weak. And when we review, we say, look, if nothing serious has happened in this organization, the guys who work there, they must be saints. It doesn't mean they fear God. Because your control environment is so quick. Your processes, your procedure, how your people are structured, who does what, who checks what, the various checks and balances in your organization is so vital. After the assessment, we now said, look, what we're going to do is to carry out what we call database integrity check. On carrying out database, what is integrity check? I don't think you've done that. Try it out. Just have a way to reconfirm your position. Usually, the system for every core banking application that you use, alright, depending on how your core banking application is designed. When you post transaction, there are entries, maybe the teller entries. If there are fund transfers, you also have fund transfer entries, deposits. So how your system is designed, there are each of the system has its own tables, have a central transaction table in the database, but there are also those that have subsidiary tables that handles different kinds of transactions, depending on how your system is designed architecture. So what then happened was that, can we just do a test of the balance integrity? Do a recomputation of the balance that exists, that the system is what we're carrying from the various subsidiary files. Recreate it and compare with what the system says this is our account balance. When that happened, quite a number of accounts stood out and had huge differences. And then investigating that further, the account of that a guy who is a staff in IT was among the accounts. They are now going further down into analysis. We now also discover that there are other accounts, but those accounts also have had a kind of a relationship with that very account. The guy had been milking the organization. Huge loss that was unimaginable for the institution. The case of microfinance banks and the fintechs, I must confess to you that I'm so concerned because you may not make that necessary investment in technology that will expose what internal threat actors and external threat actors, what they do. I'll get to that. Please, let's move to the various, please, move forward. I'm not going to, just because of my time, I'm also going to go down. This is the Bangladesh Center. Go down, please. Go down, right? All right. So go up a little bit. All right. Know the potential threat actors, okay, and their motivation. I'm not talking about that. Now, but let me talk about what happened with Target. You saw Target store. Target store, what happened was that Target was breached. And Target is in the US. Most of you travel to the US, you want to go to Target store to go shop. So that organization was breached and the cyber criminals already have vested information about the card, debit card, credit card, for those who went there to shop. Okay? When we have that, so that is it. The ideology and violence. But at the end of the day, some of them also money was also behind it. And we have the thrill seekers Someone introduced that these are young guys who just want to make them. Do you know I was able to bridge ABC Bank? Do you know I was able to enter the government? So because there are tools that are online that are free. You don't pay anything for those tools, hacking tools. They are just free. So these guys, they learn those tools, they just want to boast, look, oh boy, I was able to breach this obligation. You know, their system is not secure. That is a free system. All right, next slide. So let me talk about, sorry, hold on. Go. This is the greatest one and the most dangerous. Insider threat. Let me tell you the reality. Stop thinking just about cyber criminals outside. Think about inside. This is a guy that can do you great harm. They understand how your system functions. They understand the weakness of your system. They understand the weak control you have in your organization. These guys are not seeking for any, they don't need to hack you to come in. They already have a legitimate access. These guys are your, probably if they are administrators, they are developers, they manage your system, they have privileged access. They are not struggling to do you harm. These guys, so most things you end of the we are attacked is a supported by insider. Insider threat is the biggest for any organization today. So when we talk about the fact that there's a major breach in this organization, give and take, you know, when we talk about the cybersecurity issue, 70% give to insiders. That is the greatest challenge financially. Because you are talking about money here. Alright? Let's go to the next slide. Next slide, please. Now, we have those whom we have categorized as the APT, advanced persistent threats. Okay? So these threat actors, they are the top in terms of tier in sophistication skill, capable of using advanced technique to conduct complex and protracted campaigns in pursuit of their strategic goal. Okay? And we call them APT, and you know, this designation is because, you know, if these guys are powerful, they are well equipped, they are well resourced. So we leave this for nation state. So nation states, you know, threat actors are majorly comes under this group. Next slide, please. All right. So now let me talk about specific potential threat actors. So let's talk about internal. Those that can do harm to the organization. If you don't carry out, you know, when it was giving the presentation, your recruitment, I just that's to say it. Because when your foundation is faulty, a lot can happen. You recruit the wrong people, not motivated, and let me tell you the reality. You employ guys who are in IT. These guys are technical, they are well skilled, right? And you don't pay them well. And these same guys can go to any other organization out there and get a good pay. They will sort out themselves if they don't fear God. I must confess to you. So it's important that we realize who are those that can truly do us harm as an organization. So we see privileged system users. They have access to the system. They're not ordinary users of the system. They administer, they manage the system. They also probably involved in creation of users. Alright? They can do harm. So the guy whom I told you did you know, those fictitious transactions. It was a script he developed. And you can see how far the guy, he also knows the internal process. That usually the internal control will be a call over. The auditors will do a review. Okay, so and let me say this. The way you audit, the way you review your system today, if you are still doing it the old way, I don't give an instance now, it's what they want you to see, you will see. So you need to go beyond that and have a direct access for scrolling your information. So we'll talk about that. The time will not permit us to talk about that. But let me just, what I want to do is just to, you know, expose some quick things to you, because you need to go back and reflect and say, hey, I think we need to do something within our organization. Alright, so system administrators can do damage if they want to. They have privileged access. They administer the system. They can probably gain access to your, alright, because they work with database administration, access to your database, I thought I would probably use my system. The time they gave us a minute time. When they will say something new, because in our training we have a core banking application which called. We train people on what are the possibilities that can happen on core banking. Let me give you an illustration. You may think that your core banking, right, is fully secure, right, and that when users are created, password is encrypted, right? When you go to your database, that password is hashed, right? You know that it's hashed. But let me tell you one thing. When you copy that hash password, we have a tool that will reveal that actual password. So your administrator wants to do harm, he can go to the database, copy out what the hash value of a user's password, and then go to the cracking tool, and that will reveal the hash. Yes, you have their tools for that will reveal the actual password, and then use it to log on. Two, he can not only that, the guy within can also decide to create fictitious user. So if you have a weak control, weak monitoring, weak review process, I'm not talking about how you need to deal with that also, very important. The guy can just get away, once he is done, he will clean his trash. So the question is that, what are the controls within your core banking? What have been activated? What are the laws that exist? Who monitor this law in real time? Who does that? And so there's so much I'm going to talk about that. And so these guys can do a lot of harm. Database administrators, for solution developers. The guy developed a solution. Alright? And there was one that happened in South Africa. What kind of treatment have you carried out? Do you know this guy? What is his background? What will he got? If anything happens, what will he start to lose? And today, if there's in the news now that your bank has been breached out, even those who don't know what the detail about it, the first thing they will go for, God save me, my money. They will go for their money first. So when we talk about the issue of reputation, it's so vital when it comes to the business of banking. That is so important. So what we see, so you have reduction in paper-based transaction, regulatory requirement, all right? So we also see that there's a high reliance on third-party service providers. So you totally rely on third-party service providers today. So the question I now ask you, those third-party service providers that you rely on, do you know how they can harm you? Have you been able to carry out to understand what are the possibilities? And what control do you have in place? What oversight do you have? What do you monitor? What do you look out for? This is crucial, right? So, increase digital banking fraud, we are experiencing increase in lack of effective vulnerability management program, and also lack of, so your vulnerability. You know what areas where you're vulnerable today, across your system, your network, you truly have a true picture of where you stand. And are you working towards closing those gaps? Alright? And then lack of effective DR and DCP. The greatest temptation when it comes to DR and DCP, most of them they will have, say we have a backup server. Alright? And then as transaction grows and number of clients keep growing, they will keep upgrading one of the what? The server, the primary one. And they're not upgrading what? The secondary, yes, the backup of DR. When there's a major issue, they now say let's switch over to the backup. The next part of the backup is cannot truly carry the volume of transaction. Okay, so but on a deliberate terms, you must have a program that says, look, from this week we're going to operate from our DR location, a part of your DCP program. Alright? Very important. Lack of adequate personnel security. How do you recruit your staff? Especially those that play a crucial role within the organization. You have a proper background check on those personnel, and you have ongoing monitoring of their activity. Because you can employ a guy who you think is good today, tomorrow he turns rogue. How do you manage that? And how do you sack such people? If you want to sack a guy in IT, who is administering your system, you just need to create, there must be a way to ask them. Just tell them that they get the weight of it that they're going to ask us to go. If they are playing crucial role, they can do harm to your organization. Before you even allow them of anything, they have been disabled completely on your system. Very important. If they can plant a logic bomb within your environment, not only that, they can do harm to the organization if they want to. So your personnel security becomes crucial. How do you manage that process? All right. How you structure it? How to your personnel? How you structure? What roles do people play? Next slide, please. Next slide. Okay. So approach to managing your security risk. All right. Okay. Now, when it comes to the information security, we feel that we have to meet this criteria. That whatever you put in place, technology, it must have that confidentiality criteria. That it's only those who need to have access to the information can have access to it. Those who are authorized, who have the need to know, the need to do, they can have access to the system. So in your design of your system, your implementation is a crucial requirement. Confidentiality, integrity. Integrity has to do with completeness, accuracy. Alright? So when you talk about that your system, the integrity is guaranteed. For instance, if someone goes to your mobile banking and check their balance, it shows they have 100,000. They go to your internet banking, it's showing 150,000. If you have an ATM, you go to ATM, it's showing 300,000. So each touch point is giving us different account of. So that means that the integrity of the system is increased. So the integrity of the system, how accurate, how information are you? Can you truly guarantee that your information today is giving us the right information? Right? Availability. You want to be able to serve your customers anytime, anywhere, any day. So you must implement key control that will ensure that your system remains available, right? That it's up and running at all times. It's important, and that's where the issue of your disaster recovery and the DCP comes to play. Right? So what kind of arrangement you have in terms of supporting your operation? But when your customers come and say you are begging, sorry, our system is down today. They come the next day, sorry, it's down. They come again the following, I'm sorry, you keep begging, you will lose those customers. It will have a reputation implication on your organization also. Alright, so what do you have in place with ensuring availability, right? Non-repudiation is that we want to be able to say that, look, when people do things in the system, you have the system has been designed in a way that they cannot refute that they want who did it. I want to give you this case study. There was a case in a particular organization, a bank, right? So I'll give it from two different settings, two different banks. One bank did something right. They were spot on in what they did, their controls, their all their tools, but the other bank did not. Now, look at this issue. A teller. A major fraud happened. But that teller cried out, I'm not the one. I'm not the one who I didn't have this end, I didn't have it. And even the supervisor believed that I don't think he's the teller. I know this person, I know. But let me tell you what happened. When it happens like that, usually the problem will bring in the auditors, right? To come and audit, or the guy in the forensic come and review. But if the forensic is. So the question I ask you, how do you know who's opening the door for the guys to come? You may end up saying, look, we were briefed, but it was in time. But it just opened the door, for that to happen from external. And ask yourself today, probably people work from home, people also work from remote, right? And maybe they're going to a database from remote location. What can they do? To what extent? You have a job server, do you have anything that helps to track what this guy did during that period, during that window? What do you have in place, right? So next slide, please. Go back. How do we truly tell the story of what happened and how it happened in the event of a major security incident? So when there's a security incident, how can we tell the story of what happened and how it happened? How? I just gave an illustration of the fraud that happened, how one bank was able to unravel it, because they had the necessary tools and control in place, the other was not able to do it. Yeah. So how do we obtain the relevant data required to provide top management, quantify of the organization's cyber security and security related incidences? So how do you get the data? Do you have any dashboard that talks about that? Is there any dashboard that reports to you, that shows you the state of your, how number of attacks you had in each month, the number of infiltration, the number of security violations, the number of policy violations and related to security policy, right? And how do we proactively detect new threats within the organization? How do we get intelligence on emerging security threats that can hurt the organization to enable us to take appropriate action? So these are kind of questions you need to ask. Yeah? So vital, this is important. These are questions that are relevant because you keep you thinking, you then push to the next level on what controls to put in place. Next slide, please. No, go back. Go back. You just. Okay, benefit of, okay, fine. So, benefit of using technology and risk mitigation, cyber defense. So, there are technology solutions that can help you with the cyber defense, being able to protect your network, protect your database, protect your systems, your endpoints, and not only that, provides you visibility so that you can monitor, your team can monitor and know what is happening within the organization at this point in time. Alright, so there are solutions, technology solutions for that, the cyber defense. Fraud prevention and detection. There are also fraud detection and prevention solutions also that can help you monitor and detect fraud, be it internal or external fraud. Network and system visibility that can provide you also a clear visibility on what is happening across your systems and your network. So that those who are monitoring can see correlate events. So there are tools for that. Incident response, also tools and solutions for responding to security incidents. So if you don't have tools, you don't implement those solutions, you are handicapped as an organization. Because things can happen that you know. Next slide, please. Okay, go back. Okay, forensic investigation. So you want to investigate certain incidents, you have to do some capabilities, business continuity, regulatory compliance. How are you positioned to comply with regulatory requirements? The CBN guidelines, I hope we did not just take it as a document, you're not doing it to fulfill CBN mandate. No. There are those who adopt those guidelines just so that the CBN comes, they tick for us. It should not be, because the truth that those things, if you truly implement very well and monitor very, very well, is to protect your organization. In fact, the first point of call is not because of CBN, it's for the sake of your institution, the securing of your institution. So there are those, it's only, nobody knows they have policy. The policy is for the drawer. It's only when CBN comes, they just show them. You have police, policy, no staff. What training goes on within the organization in terms of information security awareness, education, and you know? So it's important that we know that regulatory compliance, security awareness is crucial, right? And we have other technologies that can help you with that, all right? And help you accomplish that. Because for instance, what we do now, we have pre-recorded courses that can be on fraud prevention, on ethical hacking, and whatever. You don't need to be subscribed and then you learn. People can learn today. You don't need to send them to a class first of all for them to learn. So engage the organizations that have those courses. Engage with them so that you can have access to those courses. If you don't train your people, what do you do? Even your customers, educate your customers. And this age we have today, awareness is key. Cybersecurity awareness is key. Even for parents, most parents today need to train their children. If not, your children are getting access to dangerous things that will hurt their future. What lessons have you learned as a parent today when it comes to cybersecurity or awareness at various levels? Those courses exist. As if the child is 8 years in this age, these are the things to tell you. You need to engage them up front. So that you tell them, because cybersecurity is affecting families, hurting families. People are having a whole lot of mental issue problem. People are committing suicide just because of their presence online. So this knowledge is a must in the digital age. Alright? Next slide, please. Next slide. Okay, go up. So stop advanced, okay, and emerging threats. So today AI support, there are tools that support that, okay. Implementing native AI platform, stop 0-day payloads. Okay, some of the threats like an organization, threat hunting. So going beyond simple alert management and traditional, managed detection and response to intelligence. So there are services you can subscribe to. You may not make the investment totally, you may not be able to have the capacity in-house to do all those things. So all you need to do is to subscribe to services. They work with you, the cost is reduced. All right. Next slide. So you may not need to make preventive detective and recovery solutions. Next slide, please. Okay, now we need to implement a robust anti-malware solution, MDR, to prevent spread of virus and dangerous malware, because malware can do a lot to your organization. How do you think somebody can get into your organization? Let's assume you have 1,000 staff or 200 staff. The target organization, you know, if I send a weaponized email to 200 staff, at least 10% click on that attachment, it will install on your system and provide a reverse connection to the guys out there. So one task is that they're already on network, and they're silent, and they now keep moving to your network. So your endpoint protection, ensure that your systems you use, whether it's your laptop, your desktop, your server, are well protected, is crucial. Implement identity management solutions to effectively control users' access to systems and network. IDM solution is also very vital, right? So that people who are going to get access, you manage it. And again, when people move from one role to the other, it will be automatic. So that they move, cases where people have moved from one role to the other, they still have that old access. It shouldn't happen. Or people resign, and yes, their profile is not deactivated. That's not good enough, right? Implement multi-factor authentication solutions to enhance user authentication, protect system users, and prevent identity theft. Okay? And then implement a database security solution to protect the database against unauthorized access and manipulation of corporate transaction data. So your database monitoring solution, the DAM, to track what people do, because that is the only way you can know that your administrator is fiddling with account balances. So you have your DAM that feeds a SIEM solution. SIEM, S-I-E-M, Security Information Event Management Solution, which is used for correlating events and monitoring. Because you need to have visibility to know who is doing what within your organization. Alright, so it's important that we know this and ensure that your organization is protected and secure. Right? Next slide, please. Deploy firewall, IPS, IDS to prevent network intrusion. Right? It's also very important. And deployment of web application firewall to prevent web application attacks. Right? Then deployment of anti-phishing solution to detect and shut down rogue phishing websites targeting your organization. Deployment of anti-fraud solution. Okay? So, which is also important. Instantly detect and prevent employee fraud and external fraud. So tools are there, technology solutions are there. You can't be doing a digital banking without the required risk management tools, security tools that will help protect the organization. If you don't have those tools or subscribe to those tools, what will happen at the end of the day is that you're likely to be exposed as an organization without you know. Alright, so this is so important. Next slide. Deploy reliable vulnerability assessment and control testing tool. You don't need to apply, just engage the program to do that for you, right? And implement fire integrity monitoring tools to secure the system configuration and quickly identify any unauthorized changes. So there are fire integrity monitoring tools that exist. The data loss prevention tools also exist without the data content theft. Your AML, EFT solution to also protect the organization operation. And deploy SIEM solution, I mentioned the security information event management solution to support log correlation analysis so that you can monitor and have that visibility. Alright, so if you have your security guard, I don't know how you point that API. How do you assess your security guard? That is very important. You know, the one I was in banking. If a part of my assessment is how many fraud scaled through, because it will keep you thinking, you innovate. That's the truth. How many external intrusions do we get? So it must be measurable. So how do you monitor, how do you measure the performance of your guys who are your IT and also security? How? Alright, very important. Next slide. Now, I want to say this, both controls, key controls for MFBs and I think they're very important. Your governance framework. You know, he has said a non-discrimination and it's so important. Your information security manual and policy, it's so vital. It's so vital. How do you use those policies? And are you truly implement them and just for the drawer or for CDM? implementation is key. That document ought to tell us this is how we're going to manage security in this organization. It ought to influence how people are held accountable and how they also use the organizational information assets. That is so vital. Okay. Chief, please, can you just scroll up? There's one slide. I think you skip that slide. I want to show you that slide. Go up. Go up. No, go back. Go back. Keep going.
Okay.
I also want to know, since the IT guys now have become suspects, this and as we put the insider threats, it's a risk to us. If you do a background check on them, if you do monitoring, what kind of control do you think can actually be put in place so that we can check these excesses we have mentioned here and really be sure that yes, our organization is actually free or secure from these threats we are talking about? Because the insider threat, like you have said, is the big one. How can we control it?
All right. Okay, so one question, okay.
Good afternoon. Good presentation and very, very insightful. But my question is, are we running out of ethical hackers, or the ethical hackers are not moving to unethical hackers because the rate of cyber attacks are really, really increasing? It's unfortunate that we don't really have data in this space in our country, because I know a lot of financial institutions are being attacked, especially in ransomware, and they are paying billions. Now my question is there not a way to have this information disseminated? You've shown some, and most of them are foreign. We don't have, data for the attacks in Nigeria. It will be a source of information and also a source of prevention. Also, if I can learn from somebody that made a mistake, I can quickly, address my own internal controls, make it strong.
You know what I'm saying? They want to keep people that it's like an advice we do. These are what we're seeing now. Go and check out your organization to make sure that you are not exposed to this. Truly tempted, that becomes the incentive to want to do that harm. So your internal practice becomes so vital. What is the process, for instance, for your application development and to the point of launching that application? Who guides that process? What review happens during that process? If someone leaves a backdoor within an application, for instance, how do you get to know? So that means if that's the case, it's something that there should be what we call code review. There are tools for code review. There are tools people do code review. So if you don't have internal capability, then maybe you need to then engage an external party to assist with that. So a code review that will help convey, and then not only that, what can then happen is that the guys who develop are not the ones who implement. That delineation needs to happen. And then the system that you want to implement, before you even implement, there should be a security assessment, a vulnerability assessment on those applications to ensure that those applications are not vulnerable. Number two, that the application also has the relevant control. For instance, we talk about accountability. When someone, you be able to track this is the person that did it, you cannot deny. So the application in place, ask yourself today, is this so rich when it comes to audit logs? What can it track? What can we see? And is it such that the auditor, the administrator can delete those logs, for instance? If you have a SIM solution and it's piped that takes log automatically from the system, what will then happen is that the auditor, if you try to disable that log, the guys will automatically will know. Because the system will do that, look, someone has disabled the log. Because the guy who wants to commit fraud, the administrator, they want to disable the log, no one to know. So if the log is not disabled and is tracked within your system, you will then see, this guy, the guy who can see that someone has studied the law, or the law is not being tracked. You know, so it's a combination of relevant controls, a combination of your process, the process you have on ground for development, deployment of application, how roles and responsibilities are well segmented, the ongoing monitoring that exists within your organization. All these are combination of controls that will help you also deal with insider threat. But I must confess to you, the greatest part, the power of it all, that visibility. If you don't have visibility, knowing what is happening across your system, it emboldens the internal threat actors to act. So, and then, who have access to what? Even those, can people connect remotely? They connect remotely. How do you monitor what they do in the environment? So it's a combination of controls. So remember I talked about your preventive, your detective, and ability to respond, exactly. So those relevant controls, after we carry out the risk assessment, it's relevant to have them in place, and that will help you deal with the issue of the internal threat actors. So before you go live, it's important that you do also those checks, vulnerability assessment, and then for code review also will be helpful in helping your organization succeed. Now you talked about the issue of the CISO and the risk management. Yes, so we discovered that one of the risks is cybersecurity risk. So there should be that handshake between the CRO and the CISO. You should attend the same meeting where you deliberate on where you can champion the issues, because at the end of the day, you are talking about your enterprise risk. The risk that relates to cybersecurity and so forth forms part of it. Okay, so you guys need to discuss it and to know also that the guy who is handling that role is doing his job very well. They have reporting, coming to that meeting to present their own reports. Because by the time you are presenting a report on the position of the risk management, another angle is the cybersecurity risk, which has been presented by the CISO. It's so important. Okay, so that handshake needs to be much more. This CRO need to be knowledgeable also. It may not be so technical, but it needs to be knowledgeable on the kind of risk that you're sitting on, what can wipe out the institution. But if you are focused on just credit risk alone, market risk alone, and then cybersecurity risk comes, and then that becomes a big issue. So you just need to know how are we dealing with it, how are we managing it. The CISO has that primary responsibility in dealing with that, but you need to be in the know that we are managing this risk. The board need to be also be trained when it comes to cybersecurity now, so they can ask the right question. Because where the board they're not trained, the top men they're not trained, they can't ask the right question. They can't know, because you need to have a way of measuring the performance of your CISO. A clear KPI needs to be set for the CISO. You need to know the basis for the assessment. And the guys in IT also, very important. Alright? So, someone also asked question around the, okay, when it comes to, someone asked something on, is it on PAM, privilege account? There are various tools. I wouldn't stand here and recommend a tool for you. Okay, so what needs to happen is that you shortlist tools and do evaluate. There are tools that exist. I know tools that exist. So look at those tools. I can't just come and sell one tool for you, tell you this is it. No. So evaluate tools that exist and the one that will meet your need, and also much more also cost effective. Very important, cost effective. Yeah. Because you can go for a Rolls Royce, but Rolls Royce is not what you need. That's the truth. So it's tools that can meet your need, and also that you can also manage the cost. Because also all this comes with a huge cost. For instance, what the big banks spend, you cannot spend that. Yes. When it comes to big banks, the budget on cybersecurity is huge. You know what I'm saying? Their budget and salary is more than what microfinance bank needs to operate. I'm telling you, that is secret. So you cannot match them. So fit for purpose and also to be able to help you meet your need, and at the same time you're getting your result. Alright, so if I come here and code this tool for you, that tool, the cost of that tool, go and check it out. Maybe you're spending the dollars you'll be spending, but that's not what you need. Right, so proper valuation will be done, and also come to think of it, grant you access that you require. Who said they will not grant you access? Why would they grant you access? Whether you are a risk officer or not, they need to grant you access. What you have to manage of the management. As a matter of fact, you don't even need to ask them for an access now. You ought to have had access based on your role, your job, for independent review and being able to access data acquisition for your own analysis. So it's not because you cannot modify, but you should be able to generate those, but do extract and do analysis. So in terms of that, you should be granted access. And you can't tell me if the management says, or the CEO or the chief operating officer or the chief officer will grant access to, and the IT will say, no, it don't happen. Because you need it for your role. Okay, but what I also emphasize is good for the guys in the risk, audit, control, you also have training. Because when you're also trained, you can ask the right question, you know what to review. You know, because if you don't know what to review or what to ask, when you come to them, they're mocking you. They will show you what you want to see. And you will not find anything. A guy who is committing fraud can't report himself. That's it. So it's important that you know that. Alright, so I've talked about code review. That's the way code review will help you to uncover, this is part of the process, to uncover any backdoor that's left in an application. The code review will do that. So and then the process of deployment of application and ensuring that those who deploy know those who develop, and that individuals can modify application just like that, just modify, upgrade, and then push to production. What is the quality assurance process? A proper testing needs to be done, sign off has to be done by various, both the end user, the guys in the assurance team, control, internal control, audit, security. They need to sign that this, we have reviewed this, and these are the checks we've done, and these things are working as intended before deployment to production. So your own internal practice also matters. So when we talked about managing your IT risk, talk about technology, talk about process. So that process, talk about your policies, remember we talk about procedures and your standards, which is key. So when you deploy an application, you must meet your standard, security standard you have defined for any application in your environment. Alright? And then we talked about also people, what they do, roles and responsibility were segmented. And lastly, we also talked about the third party, right? Managing the third party risk. I don't know if I've answered all the questions. There's anyone I skipped? All right? Okay, Mom. God bless you. Thank you. That developer shout out, number one, is that a developer, first of all, start with the practice. The development environment is different from the production environment, number one, for the life environment. So they must have their own way they operate. A developer don't have any business in the life environment. It's the development environment is where their job starts and ends. Yes, number one. Two is that for the developer, you want to ensure that they don't have a backdoor within the application. That then requires a code review. So at the develop application, part of the process is vulnerability assessment and also code review that needs to be done, so that if there are hidden codes backdoor within the application, it will be thrown out. Alright, code review. And then 3 is that you have your own internal process. Look, no one goes to modify the application without going through a change management process. Approval has to be done, proper review has to be carried out before, migration. And the guys who will migrate to production environment, they are different from those who developed it. So that segregation is so vital within your environment. And I also want to say that those who work in your IT, you must treat them well. Very important. Treat them well. Monitor their behavior also. If they are not happy, make them happy. All right, so yes. So I guess I've answered all the questions, right? All right, thank you.
We can do better than that. Come, let's put our hands together for Sam. Oh, thank you so much, sir.
Thank you.
We are running against time, so we're just going to quickly go into the next sector of activities we have. It's my great honor to introduce our next keynote speaker. She is the former Deputy Director, Central Bank of Nigeria, a Fellow of Chartered Institute of Secretaries, an Associate of Chartered Institute of Arbitrators, LLB, and a Fellow of Enterprise Risk Practitioners. So please celebrate her as we welcome Elizabeth Arrow Heather.
Good afternoon, everyone. I'm not seeing the excitement of your faces. I am particularly, oh good, she's dancing. I'm particularly excited to be here. Without standing on existing protocol. For me, it's a great privilege to be here. Well, Mr. Alton should have told us that we're coming for a training. I just thought it was one of those occasions where we just meet and talk, but I have really been, I have learned a lot. It's a good revision for me as an examiner, and I believe you're also learning a lot too. It's a very apt topic, what he has chosen for this, the theme, effective risk management and compliance, and itself for microfinance and fintech sustainability. When Mr. Bola was here, he spoke about what microfinancing is supposed to be. And the registrar of the Chartered Institute of Bankers also talked about how microfinance can earn somebody in Bangladesh a Nobel Prize. That shows how important it is. But maybe in Nigeria we have not gained the fruit of our microfinancing and experience. My experience as an examiner, I wasn't really too pleased with what I saw with microfinancing. As at that time, you can only point to 5 microfinance banks that were doing well, that you go there and be excited about, and yes, these are doing business. When the gentleman from Hong Bank was speaking, he talked about how they were maintaining a portfolio at risk of 2%. I'm glad that one of you took him to task to ask him how was it being done. I am ready to really take him to task too. Most of the institutions we went to, you find institutions with a power of 97%. I hope there is no such institution here. You could even see 42. You see such ridiculous numbers. So it was a real headache for me as an examiner that is it that this thing is not practical? Microfinancing in Nigeria, is it that it is not practical? So I'm happy to see somebody who is beating his chest and can boldly say yes. It is possible to do it and do it well. But for me, microfinancing is about who are really supposed to be your customers. not the person who is doing very well, like he even said, the average Nigerian will bank with a commercial bank or go to a microfinance bank to take a loan. But I would have thought that microfinancing was targeting the woman that is selling product by the roadside. You know that there's this saying that, and even the registrar mentioned that if you empower a woman, you empower her household, and that affects the economy. Who are you supposed to be serving? Who does the tire? What's the name of the person? The organizer by the roadside. I thought that was the person you are supposed to be working with. Help him to buy his tools. So if you are concentrating on something like consumer banking and helping people to buy fridges and all the televisions they need in their houses, that's how I got some of these things in my house, consumer banking, so I can play with it. You know, I really don't think we're getting to the bottom of the line, which is what microfinancing is supposed to be. So for me, this is a real good topic. How can we really carry it out in Nigeria? Because it's what really affects. Now we're talking about FX, isn't it? We're talking about how the rate is coming down. But everybody is complaining that our standard of living has not changed. The prices in the markets have not changed. So the market woman is still waiting to see how tomatoes will come down. It's not about dollars now. You and I are sitting here comfortably, so we can talk about the dollar. But the real Nigerian wants to see how can the little trade that are being by the roadside, how can it be? For me, I mean, as a past examiner, that's really my concern. And I hope that is your concern too, that when you live here, how do you practice microfinancing acceptably in Nigeria? How can we make it work? The banks are already working. So how do microfinance bank, how do they work? Somebody shaking his head, maybe see the banks are not working, but from what I see, I think they're making their profits. But I want to see microfinancing work in Nigeria. That would really excite me. So for me, this is a topic that's really, apt, something to really delve in, and I'm glad about it. The speakers so far have really gone to the nitty-gritty of how to carry it out. And the gentleman over there encouraged collaboration amongst us. If it's not working for you, as invited you to come to ask him, how is he doing it? So when we leave here, let's have that attitude of asking one another, what are you doing? I mean, those of us that are doing well, how are you doing it? So that I can also improve on mine. We talked about peer review. Those are the things that will help us in this in the industry from what I see. So I'm really happy to be here, and sustainability. That's one thing that we're not too good at. How do our institutions move on from year to year? How are they going to move on from one generation to the other? How do you ensure that the microfinance bank which you're working to in 20 years' time, you can proudly set yourself there to work? That's what it should be for us. So that's why we should pay attention to compliance. We should pay attention to, I've already learned from what we talked about. So it's not just about compliance, we talked about strategic perspectives. We talked about the best practices. Those are the things we should look into, not just regulation. Okay, CBN is coming tomorrow. We talked about best practice. We talked about looking into the strategy. So I think you really just more than enough to chew today to help us to go on with what we are doing. And the journey of the 1,000 miles was just starting on. So I really want to commend the Institute for organizing this brainstorming session. And once the little that we learn today, and if we practice it, you'll find that we move, that's a little contribution to the economy. We would have moved stages ahead. It will bring a change to what we're doing. You go back to the institution today, you're a different person from what you were on Friday. You come back on Monday, you're a new person. You're coming back with a new perspective because you learned something today. So I'm really excited to be here. I'm glad with the numbers that we get. As you go back to the institutions, encourage them to take advantage of opportunities like this, because this really has been very exciting.
Thank you very much, ma'am. We're going into the last, before we have the panel session. We are really working hard to see that we wrap up all of this session in good time. And our next speaker has assured me that he might not even spend as much as the time that is allotted to him. So let's get prepared for this session as I invite
different lines of defense. For those of us here who are marketers, we are working from the first line of defense. For people in risk management, IT, control, internal control, they are working from the second line of defense and operations people. So we are like midfielders, providing structures for the people in the front to work. For those of us at the back, for the people at the back, the internal auditors, what they are doing is to provide quality assurance that that process is there and is working. So I'll make the presentation, I will not dwell on matters that has also been spoken about. But basically, I will highlight the key challenges we have in a typical Nigerian environment, so that because what we have always done is to be leveraging on what we call best practice. But what we discover in reality is that when you are talking of risk management, putting in place a compliance structure, putting in place structures to make environments work, it also has to do with the culture of the people. Everything we've been discussing since morning, the basic thing that is driving it is the people. He was talking when he was talking about operational risk. Operational risk, even if you look at the definition of enterprise risk management, the process effected by the entity board of directors, management, and other personnel, designed to identify the potential risks in the operations we are doing and come up with solutions to ensure that we obtain reasonable assurance that we are moving towards our objective. So you see, people driving everything. So you can copy the best of structures. Sometimes, there was a particular bank I was working, and we were working with a consultant in South Africa. The guy called me, said, we have intelligent people here. But the challenge we have is that, Nigerian organizations do not tell you how to do things well. But you learn. He said what he has learned from us is how not to do things, even when we have the right structures in place. So we can learn from those ones. Next slide. So basically, I'll look at regulatory compliance and best practice requirements. This is the presentation outline. Then I'll also highlight areas of where we have the challenges that is not making our system work. Because if we look at basic concepts from now till Jesus will come, answers will never come. Because organizations are failing. I've also shared my own personal experience with us. Twice, I was told to resign as chief compliance officer. I was told to resign from an organization because I insisted that the right things be done. So you can insist that the right things be done if you are not principled, if you don't have your culture. Some of them, they are, in fact, I didn't even know when something later happened to them. One of the shareholders now called me, said something happened. He was not asking, where is compliance? He said I had left. They didn't even tell him the reason why I left. They were the ones who told me to go. So you can see, they want to carry out a transaction that will have killed the bank. And I said, you cannot. You said a church wants to bring in $10 million into Nigeria. I said, CBN says you must collect a certificate of capital importation. He's an executive director saying we are not going to get. After this is direct money laundering. If anything happens, I'm going to be the first one to be picked up. And once they hear that they lock me up, everybody will vamoose. So you have to just manage. You have to manage your own risk too. It's true. So this is the presentation outline. I've already done an introduction. I won't dwell much into the historical perspective. I'll give us an overview of the regulatory compliance requirements, because regulatory compliance is very lethal. It can kill an organization whether you are doing well or you are not doing well. It also depends on the disposition of the government or the regulators. They want to use somebody as an example. You will just think it's business as usual. And the person, if somebody has told the former CBN governor that 1.5 years down the line, you will be in predicament now, they will tell you that you are dreaming, it can never happen. Somebody has told Yayabelo that you're facing what is facing now, they will tell you that you don't know what you are talking about. So, so I will look at, but I will highlight some of the key challenges that we have, that we need to go back and go and address if we want things to work well. So the regulatory reporting standards and best practice, then the tools and the activities that we need in terms of relevant standards, implementing effectively MLCFT program, compliance policies, implementation of the good book, automation of the regulatory compliance monitoring process. Then I will look at initiatives on business continuity planning and crisis management. And we'll take a conclusion. Next slide. So I won't bother us with the historical perspective. No, we have gone, this was something that was successful in India. And we have gone to copy the same thing, thinking that it will work here. But we don't have the same culture that those guys have. You know, I was watching Al Jazeera last night, and they said there was a flood in Pakistan that swept away 100 people. You know, so when we are talking of managing risk, people regulatory compliance risk, I was saying that I say, you know what I'm thinking? That God loves us in this country, that we don't have this kind of disaster. If we have, everybody would not be running enter scatter. Look at when there was bomb blast, people were running into the lagoon and died. They were running into the canal to die, and nobody was telling them what to do. So we have that typical challenge. So till date, microfinance banks have been providing a broad range of financial services, including loans. You know, they have been doing. What I feel is mainly wrong was that sometimes I think the main error of microfinance banks is that their risk appetite and tolerance are not properly directed. You know, I went to a particular one and I was asking, you are a microfinance bank, your capital is limited. So you have to decide, your risk appetite has to be tailored towards what you are meant to face. You know, the segment that you are meant to finance. Some people, most practitioners don't face that segment. You have a share capital of 50 million, and somebody comes, help you financing 15, you give this one, you give this one, you give this one. Before you know it, the capital is everything. When those people cannot pay. So we don't usually face one of the key problems we have. Next slide. So here is just to highlight, you know, the main regulators, you know, dwelling from BOFIA 2020, you know, the CDR regulatory guideline for the regulation and expansion of microfinance banks in Nigeria. We also have other, you know, the challenge we also have is that the regulatory framework does not discriminate between banks. So if a regulator comes, they will almost be using the same standard, maybe on a lower scale. So if you have to appoint a chief compliance officer, you have to go to market to get one. If you have the CBS cyber security framework that came out in 2018, I think 2019, they said every organization must have a chief information security officer. Nobody is left out. So those are some of the challenges that we have. We have other ones. Special control unit against money laundering. You too, take a look at the circular. You will say circular to all banks, you know, all banks and other financial institutions. So it's not discriminating that you are tier 1, you are tier 2, you are tier 3. That is a major challenge for the microfinance industry. Next slide. So empirically, I want to take our time, maybe just 5 minutes to dwell on this side. You know, this is where the major challenge of microfinance banks are coming from. Absence of basic infrastructure, the spin-off effects for high operating costs because of the nature of our business. The small transactions, and there's a limit to which those small transactions can compensate us for the risk we are taking, whether you like it or not. That's the truth. The ineffective infrastructural facilities. The same no lights, the same diesel that we buy at 1,450 is the same diesel that UBA will buy, the Access Bank will buy, FCMB will buy. It's the same market. We are going to buy diesel, and you are going to run for the same number of hours. So those are market forces of demand and supply is also observed as one of the key determinants. Presence of large or met demand for credit. You know, most of even the products that are copied from the best practice environment, they are based on good identity management. But we don't have it here. Even the biometric thing, there is a latest technology now, they can fake your identity and collect your money. So these are things we keep following. Look at when he was talking about cyber security, he gave the example of the Bank of Bangladesh heist. There's a documentary done by Al Jazeera on it, and the governor was saying, the former governor, the guy said,
He was dumb when the thing happened. I didn't know. So you can see. And so it's not that we went to school and doing everything that we think we are knowledgeable. No. But the rate at which the environment is advancing, and we want to keep pace with best practice environment. When our culture, the culture, almost all of us came from poor background. So everybody is struggling. Even the person at the top, I've seen this one I'm telling you, my experience I shared with us. It was the MD that moved, the chairman that moved out the money. Even the MD was not aware. When I saw it, I went to meet the operations person. He brought the operations person. He said he will not give me any supporting document. I said when MD comes, I will let him know that, okay, close to 1 billion has left this organization. I was waiting for that man to come to work. When he came to meet me in my room, that the chairman has said I should resign and go. So keep your this thing now. The whole thing, when it falls on your eyes. I'm not up to 1.5 years later. A guy was caught. The guy stole 700 million from that organization. And when they were threatening at TFCC, the guy said he saw that when this man left, most of the things I used to check, nobody was checking it. So there was trusting him that he went to the IT guy who was supposed to even be helping him on the instructions. He just told that one, he said, you see that thing you use, just install it on my laptop. That one didn't know what he was doing, he was working mechanically. He told it for him. When the thing arrived, the guy would manipulate it, collect the money, take it out. They were not even the one that caught him, they caught him from another place and came to report. So these are challenges that we have. At institutional level, total cost of credit charge to clients is high and mainly features a complex cost structure characteristics for high interest rates, mostly applied on flat basis. People are cutting corners. People will apply on flat basis so that to meet their needs. It's true, when you are not breaking even, limited loadable funds and potential risk of high operating margins, diminished by high operating expenses that weigh on the total cost structure, limited financial awareness due to low level of literal levels among clients and limited financial transparency by some MFBs. That is true. Everybody in Nigeria is looking to cut corners. It's only when this thing blow up, then you now start saying, oh, something happened, so this man does this. Even some people that preach corporate governance to you in Nigeria, we have the case of Ennis manipulation at Gabi. Mr. Omioni was the one that used to preach Center for Business Integrity. He had to manipulate his records in Gabi before he was driven out. So what are we talking about? You don't have to write culture. Lack of banking culture in rural areas and among urban poor is another, we don't have that culture. We need to develop that culture. And you see, when he was talking about something, okay, the last person that came to give a keynote address, he was saying, what do we need? Ethical culture, integrity. That thing is very, very critical. If you like, you do systems integrity from now till tomorrow. The man doing it for you and manipulate will build his own inside, and you will not know. So these are some of the limited support for human resources. People are just jumping from one place to the other. Widespread corruption, this is where our challenge lies. Widespread corruption that affects many sectors, including the microfinance sector. This manifests in many ways, such as public governance. If the top is supposed to come from the top, and the man at the top is the one that wants to get his way, there's nothing you can do. I've shared my experience with you. In fact, when I told them, I said, see, empty. Policy says, if I resign immediately, I'm supposed to pay you 3 months. They say they don't want it, they will pay you. I said, my entitlement, I took a 35 million money loan from you. I've only paid 10. They said they will give me good celebration package. I said, it's okay. I said, your plano that I'm using, the policy says I'm going to pay the higher of 10% of cost or net book value. They said they should go and look at the register. It remains 1,000. They said I should bring a check for 1,000 naira and collect the bottle. My wife is using it now. So, fraud at various levels. Fraud. Management fraud. You see that definition when we are looking at the risk profile. If you look at credit, market, operational, and the rest, the largest risk any organization is facing is operational risk. Risks that arise from failure of people, process, systems, and external events. It's the people risk that they are suffering. Where Nigeria is today is the failure of people risk. Somebody comes, I will do this, I will fly to heaven, I will make you, when he enters there, it's his own head, first of all take out. We saw what the people in the house are doing. Somebody was talking. One of the women was there, he said, you don't have legislators here, you have legislators. So that's what you have. So I need to share this with us so that we can know forgeries.
It's human being that commits majority of this. Next slide. Next slide. So FinTech, they have come as a newly introduced business platform. They are also coming from the developed environment, but we have the structures to make it work here. We are seeing so many things. They also have regulatory bodies. So first, they must be registered as a company, CBN, SEC, other ones, Nigerian Communications Commission, NDIC, NITDA, Federal Competition and Consumer Protection Commission, Regulatory Requirement, Corporation Licensing, Data Protection, KYC, and AML. But the challenge these people have is that some of them are beginning to, I was asking one of my former colleagues that is working with one of them, so why is it that you people have very fragile KYC structure? He said what they are using, the machine they are using is from China. You see, and some people have spent money on that too. And if you see the balance on the fixed asset register, you wonder, and that's whether the value was given for that equipment that was acquired. Next slide. So, going to compliance now. Compliance is very legal. Whether you are in microfinance, like I said, or first tier, second tier, or anywhere, you must have constant tap on the regulations because ignorance of the law is no excuse. So I brought this one here, just to, in addition to those ones. So the same money laundering provision that a big bank uses is what we are going to use. Terrorism Prevention Act. So at regular intervals, I expect that the compliance person should be carrying out what we call environmental scan. Because circulars are released on a regular basis, and as they are released, they need to be summarized, the requirements documented, so that they are even giving to the attention. What I used to do in my place, I circulate it every week within the organization. Then every month we collect it together and take it to management committee, so that nobody will come and tell me that he is not aware. So if any problem, I'll tell you, I will escort you to EFCC. When they log in there, I will leave you there. If you don't comply. It's true. So I've done this calculation. You see, CBN, AMS, administrative sanctions regulations. It contains 48 requirements. In fact, when I presented it to my board, one of them said, they were asking the company to go and get an insurance company to insure them. One of them now said that, you mean it's possible to even incur more penalty than the amount you collect as a director? I said, yes, very well. In fact, you can incur double. So it's necessary for us to create a compendium of compliance regulations so that we keep track. Next slide. So much has been said. These are just documenting, compliance risk management. We need to identify, because Warren Buffett says that one of the key things, you cannot manage the risk you don't understand. That is the identification. So some people don't rush into it. Everybody doing it. People don't understand it very well. Sometimes they give me loans to start. In fact, in those places, that place they say I should go. They brought a loan to me. I said, we are just starting merchant banking business. You say I should give somebody 5 billion out of 15 billion share capital. That means, if I have 3 less, I'm giving it to one person to start the first transaction. And they were not telling me, hey, the person is working, he has business here, he has business here. I said, those places where he had business. In fact, the proposal that they did, the points they advanced, they want to advance the credit was the same point I used to shoot it down. I said, when I total everything, that organization was owing other operators over 346 billion. I said, see, and all those people you are looking at, they can afford to write off 5, 10. You won't even know. If somebody writes off, if somebody has 391 billion, if you write off 15 billion from them, you won't know. You still thinking it's 300 and something. I say, if you have 15, if anything happens to this person, if I remove 5, that means I'm already below regulatory capital. So where do we enter from the first transaction? And when the chairman was asking them at the meeting that they are too slow, they said I was the one that didn't approve it. The man said they should bring what I wrote. When the man read it, the man said, all of them, you are all stupid. That he was the one that wanted to promote the transaction, but he was not aware of what I was writing. I said, the information is everywhere. It was in SEC. Those people didn't have audited account. They have so many challenges and the rest, and you still want to go and advance money. I said, if you advance the 5 billion, that 5 billion is not even enough to settle the interest. What you are taking is you are offloading another person's risk and you're putting it on your head. So we need to have an understanding. So regulatory compliance is about analyzing, managing, and submitting relevant data. You know, the regulator, and like I said, everyone is involved in the 3 lines of defense. So all of us are risk managers. What the risk management department is just doing is to collate what everybody is doing. Next slide. So, and the 3 tiers that have been mentioned here, we have the regulatory compliance, you know, the greatest concern. We also have industry standards. We can't say we enter, you know, microfinance is there, it's been defined. There is business that you can do. Abiola, he was the richest man. Where is he today? His children have squandered everything. So people who have that mentality, you know, before we were talking of 10%, now it's 120%. Somebody was comparing that the road from Ethiopia somewhere, the longest route along the West African sub-region, the longest route, cost about $15 billion. I mean, so $165 million. Our own is costing 10.something billion. Somebody has built the money they use for the next election into it. So they padded it. So you can't. So we need to ensure that, you know, we address all these corrupt practices, environmental process, inequality, workplace health and safety. Nobody cares. I work in organizations that, in fact, sometimes myself and my wife, when I was working there, 2 weeks we will not talk to each other. Because I will leave home 4:30 or 5, I won't come back until 11. So many things happen. People have not seen so many things. And you know, some people are fortunate. Don't just think everybody that is coming and saying I'm the sources, I'm the sources. Not all of them will. Some people are parting it with some other things. And if you go and copy them and you don't have the culture, you don't know how they have done it, the person will be a failure. And you don't have the connections. No, we are all, you know, there was a time in this country that a particular bank, when the former governor was there, when they do anything, even when they call us for this thing at CBN, they will say those ones have fulfilled all their conditions. How come? When they've done almost 20 times the transaction that some of you are doing, they will say they are okay. When you come there, they now start checking your own one by one. They're telling you what you said, this thing. Let's go. So, compliance and cost regulatory is, which one is bigger? Which one is bigger? Regulatory is bigger. You know, you may have, you know, there's something also we call regulatory compliance risk. A regulator may come up with a circular on a particular directive. You may misinterpret it and you think you are doing the right thing. When they come, they tell you that this is not what they say you should do. We are penalty. Go. You know, so, but what we need to do is that we need to coordinate the two. We need to recognize our responsibilities on both regulatory and compliance. Next slide. So, like I was saying, you can see critical components of robustness. You know, governance is always featured in policies, compliance, compliance training. We have talked about that. Technology. You know, because of the level of activities you are doing now, you cannot be using them manually anymore. But for a microfinance setup, what we need to do is that we have to cut our code according to our size. Like the last presenter said, you have to look for a cost-effective technology that will match. You can't say because UK is spending, and somebody said you don't need to go and buy. I said, you know what they are using? They are using the one they were using in one place. It was refined as they bought it $3 million. If you convert $3 million, it will almost hit up the shareholders' funds of the environment. So why do you need to go and spend that money? So it's part of. Next slide. The reporting and communication is also important so that people are carried along. The board is carried along. So other complement implement a robust quality management system, document control, comprehensive compliance training software system. There are some systems now that are online. In fact, we even make it mandatory. For example, mandatory education on AML, anti-money laundering. Once you do it, there is a system that is done that will credit you for it. So we don't need to call everybody into a class. It's an online thing. When it's your time, you log on, you write the exam. If you fail it, you will do it again. To make sure, because I also experienced something very bitter. You know, CBN came and said, how do you meet compliance? I used to do lecture for my friend. I used to do bulletin, monthly bulletin. They now caught 3 people for my internal audit. The guy said he caught 3 people for my internal audit. And he started asking 6 questions on AML safety. He said 2 of them were not properly forthcoming. Those are some people in the internal audit that is supposed to have a thorough knowledge of everything. And they are promoting it every day because they have connections to the organization. That is what is happening in the system. That's why everything is failing. That's why everything is failing. And I said, you can see what I'm giving to them. The guy said they are stealing, but he was just testing them. So, if they are not properly competent, I said, see, I will do these trainings on Saturday with physical, so that somebody will not tell me. I said, they were only interested in coming to eat breakfast and take lunch. They are not interested in what we are teaching. So, prepare for regulatory audits, whether you like it or not. And we need to manage our risk rating because our complementary risk rating will determine how the regulators visit us. If you are between low and average, they can be coming once a year. But you want to be above average or high, then you'll be coming almost 2 times or 3 times a year. So what time do you want to concentrate on delivering on the job? Next slide. So, appointment of a chief compliance officer. There must be somebody that is in this window that is monitoring that everything. Because if it's not, there's nothing not given to somebody. Everybody will not be doing what he or she likes, and we think we are okay. You know, establish and maintain procedures. Those procedures too must have a review period. It's not that we just do it, we go and file it, because environment now is dynamic. So when it says every 2 years, it was in that same environment too. Now when I resumed, I saw policies that have been dated 5 years, 6 years. When they even wrote inside that they will review every 2 years. I did this thing, I did something, a self-control assessment. I put timelines here on my team. When my auditors came, they copied the same thing, they gave it to me as internal audit. The stupid executive director was telling that this is a bad report. I said, this report is very damning on you as an executive director of this organization. If a policy is supposed to be reviewed every 2 years, and for 5 years, and people have been in that department for 20 years, 15 years, what are they even doing in the place for 15 years, for example? In the private sector, why do you want to stay for 15 years? Because they are comfortable. It's true, people put fire under their this thing, bomb, they will walk. Nobody will drive them. It's true. So, we need to regularly, following this policy, we can create an effective regulatory compliance that safeguards resources, reputation of both internal and external stakeholders. And those are the tools. Relevant regulations, we need to have a document, implement effectively effective program, advanced policy, implementation of the rule book, the way we gather all those. Even if we don't have, the CDN has rule book for the finance, for the banks and financial services. Somebody goes to their site, and you see there, you can download it and use it. Automation of the compliance monitoring process. Next slide. Other imperatives. Training is very, very key. Just tap on it. Training is very, very key. Other imperatives. Complete attitudinal change of the banking public. Staff training. Banking practitioner and regulator to improve efficiency. It's not only limited to practitioners, so the regulators too. Some of them are layabouts. They just move around because they have opportunity to work someplace. They will be doing all kinds of things, and because they are regulators, God help us all. Enforcing relevant laws, proper infrastructure, improve laws and guidelines. You see these improved laws and guidelines. You see, those are, like I said, those are when I remember servicing it. Somebody in admin is collecting money that they are servicing everyone. We learn some of these things from in those days in Access Bank, when we bought this thing, G-Wagon, for one of the directors. What the guy asked us, he said, have you tested it? Myself and my boss were looking like Buku. And I was saying, are you mad? Have you tested it? They told you it's bulletproof, you think it's bulletproof. He said we should carry mobile, we should go to Lekki was not around 2006. He said we should carry mobile, go to Lekki, let them fire it. We should record it, come and show you. I'm asking you a simple question. Have you tested it? They just told you it's bulletproof and you are bringing it like that. So, next slide. So, in concluding, effective regulatory compliance reporting is a journey. It's not a destination. it keeps up because the environment is very, very dynamic. And we must have a view, we need to look at this thing. They say something is backing up. We have to make sure that the thing can back up. Not only when Wahala happens, we now reach there. We start to put it on, the thing tells you that it's not coming up. So we will continue to analyze, design, deliver, and evaluate. And training is there to make sure the benefits from this approach is increased risk awareness and at various levels and greater risk culture and appreciation of the risk management practices. Thank you very much.
I don't know about you, I had a good laugh listening to this class. Let's celebrate and put our hands together for the Okay, so we'll just take 2 questions because we're going to have a panel session and our panel moderator is going to be asking all the speakers questions, and maybe we'll also have opportunity to do that. So does anyone want to ask a question? The first 2 hands. Okay, the lady here. And there is any other person? Oh, thank you. So we'll have just a question.
Thank you, sir, for the nice delivery. I have emphasis on this compliance. It has been a great motivation when it comes to compliance, even if it starts from our household. Then taking it to the pyramid, top of the pyramid, compliance is everyone's business, aside from being professional about it. From the opening speech from you or the lecture, you said that you have this opportunity of being in CRO's position and they have to write to you to resign. I want to ask from this point that when we get to this certain stage in professional angle, the best way for us to do is to exist, like take a walkout.
Okay, well, the point there is that, you see, before you manage risk for the organization, you have to manage your own risk. It's true. It's true. You see, we learn every day. I had a friend who was then working with Intercity Bank. He was the manager of Sabo branch. He said the MD for me now, we just said approval in principle. Approval in principle. He didn't know the guy was not signing anything. It was when Abacha came and he wanted to disturb the system. He now started picking people up. The guy said when they couldn't bear it anymore, he decided to resign and go. They went to pick him from his house. And they just told him that, don't worry, you just answer some question. He spent 9 months in detention. The guy is a good Muslim, strong Muslim. He said he was doing crusade with Christians. So come to just Yes, he said because he was seeing people who are dying. So you see them who are dying. So he was not saying that he didn't even resign on time. He ought to have resigned before that time. So what I'm saying in essence is that you need to manage your own risk. These are environments. See, they've done something. You have seen what they've done. And they're offering you an exit. Why will I not take it? You know that, yes, if you don't take it, it's possible that somebody may never get home that day. In fact, it was one of the secretaries that was telling me, say, Oga, you have resigned. I said, yes. Oga said it's good. But the risk you are taking is good. You can go home. He said, they know you close late. Somebody can come and wait for you at the car park. They use jack to hit your head. And later on, I became friends with them. Because when they now had problems with TFCC, they now started calling me from home. In fact, at a particular point in time, they were calling me from ICA Marketing Center. I told them, I said, I don't have a job. I'm an assessor and I'm marking slips. I can't come out of here and go home. You have to wait. And when I came, I said, the guy they employed, the guy said he cannot go because he doesn't know the business that was done, so that they don't go and lock him. You see? So you have to do with wisdom. I went there and said, I will take you there. I will introduce you to them. Subsequently, I told the EFC, I said, I have resigned. That responsibility is no longer mine. When I meet them, they are paying somebody to do the job. So let the person come and do. So the essence of what I'm telling you is that as you begin to rise above the ladder, your risk will start to increase. Sometimes if you don't even do anything, I was discussing with somebody who was supposed to go for a training somewhere, and he was telling me that, the new MD for that organization is trying to weed out some people. and he wants to use that training, you know, and they are bringing in new dimensions. So you can see somebody who has a training that is meant to empower people. You want to use this as a mechanism to reach people. He said you should go and set the exam for them. Some of the people that fail, you use it to hammer it. You know, so we are, Nigeria is a very fun, we are just praying to God to make things work. It's true. You know, so, you know, that's just the advice. If you know there's a risk that you can bear. If it goes beyond what you can bear, you avoid it entirely and leave there. When the risk crystallizes on them, I didn't tell you, one of the shareholders, the brother of the owner of the place, now called me. He said, Pecos, when you were establishing all this thing, you have called me. I said, oh, guys, you are no longer in Nigeria. How would I be disturbing you? I said, he now went to tell his brother, the person that holds majority share, that if I had not put my leg on the ground, maybe today they won't have a bank standing. That church, I want to bring in $10 million into Nigeria. It's not the church of Satan in Nigeria. They have found their way here. Although they don't call them directly church of Satan, it's from the US. They call them Church of Mission, Incorporated, something. It's the Church of Satan. That's why they didn't want to go through the right time.
We have a second question.
Second question. Thank you very much. My name is Koko. So you mentioned something about having an automated training or review for auditors and risk people. You mentioned.
Pardon?
Did you really?
Yes, I mentioned it. You know, you have to go and, you know, there are vendors that sell them. So once you don't sell them, they implement it on your system. So when anybody can log on to it and read, people will even have online training that you can read. Later, you now attempt the questions. Once you attempt the question, it will score you. And that score is recorded for you. Because it's also an assessment for, you know, the quarterly staff assessment. For those who failed, if you don't pass it every quarter, there is a subtraction from the person's appraisal point. And that's the only way you can enforce it. Otherwise, people will come and be eating breakfast and lunch, and they won't face what you are teaching them. Thank you, sir.
Thank you very much, sir. Please, let's give him a round of applause again, Mr. Titus and Nicola. Thank you very, very much, sir. So without further waste of time, I am going to call in the DG, Association of Enterprise Risk Management Professional, in the person of Mr. Olayinka Odutola to anchor the closing section. Please let's go down together.
Thank you very much. God bless you, and I appreciate God that I heard it from my side, and I was part of various lectures that the lectures are value adding. If it is true, please, another round of applause. And even for yourself, people came all the way from Ilori, I can see people from Benin, from Abuja, taking part. Please, another round of applause for everyone, including our delegation. Thank you very much. Right, so it's a panel section so that we are concluding. Right. So the panelists, is that Titus, where are you? You have to come back. That's the Titus. Oh, yes, sir. For the panel section, sir, we are concluding with that. Right, so please, another round from Mr. Titus Akintola is coming in as a panelist. Mr. Chuka Boniri, please come in as a panelist. Mr. Sabokeye, please come in as a panelist. And we want, let me see, where is Mr. Payo Fabi? Where is Mr. Fabi, the MD of Adosa? Okay, all right. The Chief Risk Officer, NPF Microfinance Bank. We want you to come in as a panelist. A round of applause for him. Thank you very much. God bless you. God bless you. Then also, finally, okay, yes, please come on. Right. So quickly then, we are now going to, yes. So everybody, you understand there, will be free to ask, questions and contribution from the panelists. Right. So, thank you very much. So, the person that's going to anchor this session is, in fact, I was just thinking that if we display the profile of Prof here, I won't think you will start another day, you understand? You know, very exciting person, a professional. I can tell you, he's not a local professor, he's an international professor. Tested and trusted. You understand? And also is a fellow of the Enterprise Risk Management Professor. We are glad to have him. We are very happy to have him. You understand? Professor, hey, please come in and head the panel session. Professor, come please. Thank you very much. Thank you very much. Thank you very much. Thank you very much. He's an accomplished person, I can tell you. You know, West Africa, they call him here and there, that kind of thing. And he's a professor in James Hope University. How many people here, how many of us knows about James Hope University? Right. Oh my God. You know, okay, right. When did James Hope start? When did it start? 2020. Okay, 22. Okay, you understand, right? And the other one is also another university. James Hope is in Nigeria. The other was in Liberia. You understand? So please, the panel said, you can see all of them. So you are free, let them discuss. Prof has given us 2 areas, right? So I hand over to Prof. So you are free. And I want to assure you, in the next 20 minutes, maximum 15, 20, we are out of this place. The cooperation. Thanks so much. I want to appreciate you again. Thank you and God bless.
Yeah, thank you very much. It's amazing what the Association of Enterprise Risk Management Professional is doing. So without further ado, we're just going to be reading through 2 topics with our distinguished panelists. You can see that the discussion, in fact, there was so much to learn, and it was even fun, even with just all the speakers, with the so we're going to do with the understanding the challenges and opportunities in ethics and compliance. And I have a few questions for the panelists. If I've even been able to study the entire discussion so that we have relevant questions that are here for the panelists. So going to the first topic on the challenges and going to the next one on technology. And I'm so happy that we have an IT expert here. So there are a number of questions that will be thrown out, and also the fact of but the first question is for Tunde Omolere, and is on in your experience, can you tell us the challenges that microfinance banks may face in designing and implementing maybe general due diligence program for high-risk loan clients like politically exposed persons? You know, because you spoke about enterprise management, which was very, very insightful. So, what are the challenges in terms of implementing due diligence for them? Because before you onboard them, you would have done due diligence for them. So, what are the challenges, and how do we, what are the ways to override these challenges? Just in 4 minutes or 3 minutes.
Okay, thank you so much. I think all of us will have agreed that people risk is one of the core risks that is bedeviling microfinance sector. What do I mean by people risk? Unfortunately, investors to microfinance bank bring in illegal stuff. For example, if you have invested 50 million naira, how much can you pay? A very good start. You understand what I'm saying? And therefore, with 50 million naira, you employ just human being. It's not a profession. You are not able to employ a professional that's able to do a proper due diligence. And therefore, you can't do much more than sincerely, you can't do much more than And therefore, and setting appropriate policy is another thing. I was mentioning the issue of RAC. What do I call RAC? Your risk acceptance criteria. You must be properly defined, you must be properly trained, and when you are training somebody, I'm sorry to use this word, if you are training a kid and somebody that is certified, they cannot grab at the same level. And therefore, even in training that are discriminating. As somebody was mentioning here that some of the policy that we have now is meant for the draft. It's not for implementation. A lot of policy that we write, we just copy and paste. Copy, paste, and put our name and put it in the draft. It cannot be implemented. So every policy that we have designed must be structured to be implemented by the staff. And highly motivated staff can do
exactly what we have designed in the policy. So due diligence involves a tough one based on our risk acceptance criteria.
Well, thank you very much. That was very insightful. I'm going to Mr. Titus that spoke on compliance. In your experience, are there challenges in implementing written due diligence and suspicious activity monitoring policies and procedures for products and services delivered electronically? Let us take electronic banking because we have a discussion that here for microfinance, fintech. So what are the challenges there, and what just the solutions that can override these challenges? Because the risk in electronic banking is unique compared to when it's done physically. So what are the few challenges and how can we override them? Just in 3 minutes. From your own experience. Okay. I think okay. Thank you.
I think you are talking about ultimate benefit.
Exactly, yes.
Those are new concepts.
Okay.
You have companies that, frankly speaking, in the Nigerian environment, you may not be able to, unless you have, let me just give you, when I left my previous school, I joined a regional non-interest bank. My special attraction for that organization was that, since it's going to be based on this principle of transparency, trust, and integrity, the problem I was having under a conventional environment, I don't have it. When I now got to that place, I now saw the grandfather. Because, I was initially chief compliance officer and later chief risk officer. We wanted to open, what do they call it, correspondent banking accounts. I didn't know that all the names they gave me. These foreign banks, they have sophisticated systems. So by the time they ran the names of those shareholders, that's when they now started saying that they want to interview me. That kindly note that the interview that they're going to record whatever I'm saying. That's when I started suspecting that something could be wrong. The critical one, they now told me, can you tell us whether Adama Beverages has a relationship with the former vice president of Nigeria? I now told the guy, I was not sure. I said, no, let me find out. I will get back to you. Because once the laws are very, very tough now. Once you say yes, that thing is recorded. If they commit, and I decided to do a thorough investigation on that company. When they were stating the names, the man put the names of his 5 children. But they didn't put, it's a compound name, something, Abubakar. But they just put Abubakar. There is one that attracted my interest, Chukwu Emeka Abubakar. The guy, so they were not telling me that it was an Igbo woman that brought the guy for me. I called the guy told me that he's an American citizen, that he's a Nigerian-born American citizen, and that he doesn't even know whether that company exists. Meanwhile, he's on the board of directors of that company. And I said, because this guy is an American citizen, he knows that in that place, there is no show. If anything happens, they just pick him and just give him 10 years. Even somebody that is holding responsible positions here, they will just tell you, say, come, we are giving you a free passage, just come and spend it. As the person arrives, there is no negotiation, it's 10 years. Because the law says anybody who assists, facilitates, is guilty of the same offense. So you can't come and say you don't. So it's very difficult in Nigerian environment. Another example is the one of Patience Jonathan. The company she floated, and the cook and the brigade were the principal officer. They just wore suit for them, took their photograph, put it on the district. The woman was saying that the money in that account is my own. But the guys never knew what will the cook do. They just say, sign your this thing, bring your this thing, bring your this thing. So it's very difficult to know in a typical environment. It's a challenge. A challenge really. So some of the things we copy from best practice, but we don't have the structures to enable us to decipher.
But there is a solution. You think that
for microfinance bank, we don't have this exposure.
Okay.
Because what we do is that we deal with individuals. In fact, in my organization, if you register a company, by the time we are opening an account for you, we said so Nigeria Limited / Professor Okenyi.
Okay.
Because we don't want to deal with you based on your company name. We want to know who is behind that company. So we start dealing with you as an individual. And therefore, in fact, you come as an individual with your name. By the time we know that the public law will no longer be sufficient for you, we advise you go and register your company. So when you are ready, we are even advising you how to register. So we want to know who is the person, and for you to be a principal signatory to that account, you must have more than 50% of the shareholders' fund before we can give you money. Because we don't know your company, it is you that we know. So we are not exposed to that. I don't know if other people here, but as far as I'm concerned, with my 15 years experience in this industry, no, nothing like that.
Yeah, that's a very good answer. But speaking for microfinance banks, are we just to ask, do you all deal with just individuals, or like the way you said it? Because I believe that the risk will be peculiar to different microfinance banks. Companies will want to take loans. So, but the way you put in those measures, I kind of really admire that. That is really a checking point for managing risk. I think that's a very good point that we should all emulate there. I'm just going to another question, and it's going to also go to you and next to Sam Koye, because it's on technology. I'm moving to technology now. For Tunde, you spoke about the need for technology in enterprise risk management, especially for identification of the right clients for loans. There are legal requirements to comply with the like the new Data Protection Act and also for privacy laws. How do you ensure that you can deploy efficient technology without breaching these data protection laws? You get like what in terms of, even if you might not be directly there, the kind of, when it comes to that, what the measures that can be put in place to just ensure that it's not breached, there's some kind of compliance with it, while you're still ensuring that there's an effective system in place. The challenges are there and the solutions too.
Okay, CBN has two policies. One of it is called the Data Protection Policy of CBN. Another one is about the digital roadmap, in fact with certification. And therefore, once you study those policies and you are working within the IBM, NIMS is a very big platform that has been provided for us to do so many things. There's BVN. Through BVN, you can know the detail of your clients, almost all the detail of your client, the date, the date of birth, the number, everything is there. Number two is that if you want to obtain their statement, there's a digital way of obtaining their statement directly without compromising data protection. Just send a code to the client who use their statement and come to you. There are a lot of provision that CBN has made as long as we work within the areas of the policy. Mr. Kimberla was talking about the role of compliance. Each day, policies and procedures circular are being released by CBN. It is the job of the compliance officer to go to CBN site on a recommend daily basis. You go to the site of the CBN, you download the policy. After download the policy, you will explain it and circulate it to all the members and allocate responsibility. You are to handle this, you are to handle this, because eventually when the regulators call, if you are not complying, you will be sanctioned or your license is withdrawn. This is what we do.
That's the deadline from Mr. Sam. Can you add to that in terms of what actually he said when it comes to deploying that kind of technology? Because you know so well about how the process goes in, and the fact that there could be legal requirements when it comes to data protection laws which are in place. Even now, with the new Data Protection Act, things have become more rigorous, and IT experts are not left out. They must consider those laws in place. How do you think you can wriggle around ensuring that there's compliance with the laws and also ensuring it is effective? Because without the right amount of data, it will not be as productive as possible. So how do you ensure that balance?
All right. I think the foundation also is to have to do with collection of the data. When you collect data, of course, it's important that any data you're going to collect, the client knows that you're collecting data for this purpose. Two is the storage and how you protect the data that's collected. And I want to say that there are tools for data protection, for instance, okay? Because number one is the access to that data, information that you've collected. Who can gain access to that information that you have also collected is also vital. Protection around that data is also vital, okay? Because at the end of the day, you don't want also an unauthorized individuals to gain access to the very vital data of your client. So data at rest especially when it has to do with sensitive data, there are regulatory requirements in terms of the protection. And that's why you see that even CBN has guideline also, apart from the data protection, guideline for information storage. As it relates to, let's take for instance the PCI DSS requirement for the financial institution. They said this is the minimum security control that must be in place. And once you comply with that, I think you are also taking due care and ensuring that you are complying with the relevant regulations. So data collection process, which is vital, that the client must know this is what I'm collecting data for. The process of storing and to the point of when the client is engaging with you, of ensuring that that data no longer is archived, is also very vital. So comply with the regulations and guidelines that are given. Also, all you need to do as an organization is to comply with those guidelines and implement the relevant controls that are necessary.
Yeah, thank you very much. The next question is for Mr. Akintola before I come back to the. It's very important. You mentioned, during your discussion, you mentioned vendors. And we know that a lot of institutions, banks, even microfinance banks use vendors. They also use vendors for verifying identities of customers. They use vendors for trying to get, in terms of external, get data, the right data for their customer verification processes. And there might be challenges with that because you must ensure that these vendors you are getting are not, there's no compromise from them. So there must be some best practices. Is there any way to ensure that we don't run into challenges by using vendors for verification processes, for data verification processes, for due diligence, for enhanced due diligence processes? Can you enlighten us on that so we can learn more?
Thank you very much. Basically, the use of vendors or third parties as outsourced parties. What organization best practice is that there are policies that guide their engagement. And most importantly, because contagious risks can come in through the organization, they are made to sign a non-disclosure agreement. Those are some of the requirements. Again, they also sign a kind of agreement that if any liability comes from any of their staff, and if we happen to contact any liability from the omission or commission of any of their staff, they are going to be held responsible. Again, before they are selected, the due diligence process is done with them. We check their track records, who have they done it for, similar services, who have they done it for, how are they paid. Sometimes we do go ahead to get confirmation, third-party confirmation from those people before we engage them. So those are control measures that are put in place.
Okay, that's wonderful. Mr. Jackson, anything to add to that in terms of the best practices from these third-party risk vendors?
Like you rightly said before, when it was the person to get into the system, it has to be an NSA signed and certified information about them, so that you won't have a situation where your operations are grounded. Once these are done, you give to the terms and agreement of their engagement such that your business will not be affected in any way.
Okay, thank you very much. I think it's just the last question to ask, which is always something that happens in a lot of situations. There is a situation when the risk changes in organizations. It migrates. Maybe you have already, tagged the customer, a low-risk customer or medium-risk customer, and there's a transition through that process. Can you, this is for any of the panelists that can contribute, what measures can be put in place to checkmate that particular risk? What policies or procedures or processes can be put in place by the banks to ensure that that risk level, that change? Because a customer that even for loans could have been collecting a certain amount of money might also transcend to another level and wants to collect more money. So what are the checks in place, processes in place that can ensure that the risk is mitigated from that? So that's for any of the panelists to answer.
Okay, I want to talk about
customer identification. Okay. When you have a system, a customer should be making identified in your system, irrespective of the branch the customer goes to want to transact. It's important that you know it's the same customer. Because for instance, let us say we have multiple branches. Okay, it comes to branch A, the transact take a loan, also goes to branch B, also goes to branch C. The reality is that it's the same person. So your system should be able to identify that if they have multiple accounts. For instance, if a customer has multiple accounts, okay, across your different branches, it should be able to identify that customer the same. Because also how banks implement that matters. A customer will have a unique customer ID irrespective of the branches. It's a different account you can have. Even if we have different accounts, there's a title to that same customer ID. So any relationship you have across the various locations, it's obvious. Let us assume that they want to now grant loan in another location. They know that it's the same customer. So customer identification and how you manage your customer within your system is so important. Because you can have a customer come to branch A, transact, go to branch B, transact, go to branch C, and they are different identification for that customer, different customer ID. That may be difficult for them to easily flag. So it's important that within the system, because the system will help drive that process of ensuring that look, we know the entire picture of this customer relationship with the bank. Okay, so that identification, you know, the customer ID, very important. So that even when the similar name is entered, the system will populate this customer, these are the names we have that are similar. So it's good to verify if it's the same customer or not.
Okay, yeah, thank you. Mr. Tunde, you don't have anything to add to that? Okay, thank you.
Yeah, good evening, everyone. The issue that the moderator raised is about risk level changes of the customers and what structure and systems and processes you have in place to track them and see when that change has occurred and the impact on your decision. The challenge in the microfinance sector is the capability to acquire systems that enable this. Okay, because there are implementations that we have done for larger banks that enables them, you can predict the probability that a customer will default. You can track all these changes in customer risk that drives it. And when the customer risk is changing, all those dynamics changes, and then the rating, the credit score will also change, and which is a key base of decision in the process. So the good thing also is that there are some of, maybe in my little talk after this, some of the implementations that enables those banks to be able to do that. We are bringing it to the micro level, and that will make a big change.
So, thank you for the contribution. And I just want to hear from also Mr. Akintola. You have in terms of low value accounts to medium value accounts, that change, we've seen the discussion of the change at microfinance banks when it comes to loan, the issue of loans. There's also that change when it comes to money laundering. From low to moves to medium value, or for even a low risk customer to medium risk, high risk.
I think there are softwares that track, that is when the customer is migrating from low risk to high risk. Then when the level of transactions, sometimes even when you're at the customer, the KYC level, it also has 3 tiers. If he migrates from the lower level to the higher level, I think the deposit amount is about 500,000. When he migrates, they have systems that track that. Organizations have systems. But the challenge for a microfinance bank, from the way I look at it, is that maybe the cost. You have to look at the cost benefit analysis. Then maybe they may have to look for somebody internally to put in place another, maybe a compensating control to be able to achieve that kind of objective.
Thank you, Mr. Sam. You have to. I think you wanted to say something about the migration of the risk. Do you want to make some contribution? Okay, I think you said something. I'm talking about. Okay, sorry, my mistake. Yeah, I was talking about.
Okay. I don't know the man that spoke here. You know, the level of adoption of a system that we have differs. I've been opportune to work in an institution that has a proper tracking methodology, especially when a client is captured in the first installment. You are able to rate them in their journey. You are able to know whether this client is a low-risk client or high-risk client. It's determined by a lot of data gathering. You know, I can tell you that a female is different from a male based on risk rating. Employed, unemployed, the one that is staying that built his own house, the one that's staying in rented apartment, and eventually the recruitment cycle, the kind of business that he does, the sector that he belongs. By the time we add all of these things together, we are able to appropriate the appropriate, we are able to give them the proper rating. And that's what at renewal, we don't bother ourselves. So because the rating will just come out, this person is an AA client, this is an A client, this is a B client, this is a C client, this is a D client. And at each of these stages, we allocate steps for them to be taken. So maybe at C stage, I may say, oh, sorry, you won't be able to take the next route. You say for the next 6 months. If you say for the next 6 months, you can come back. At D level, I don't want to deal with you anymore. Go away, I'm no longer giving you loan. But at AA, under one day I give you loan, you don't have to bother. At B, oh, you will feed just 2 pages of, you understand what I'm saying? So we have this rating working, all this scheme that I work with. Like you rightly said, it is the system, it is the ability of each microfinance bank to be able to adopt all this system.
Thank you, Mr. Tony. You have anything to add to that, Mr. Jackson, about the migration level of the risk? So that we are rounding up already, this is the last.
If some organization have no credit scoring card, I think that would be a long way in actually assessing when a customer is migrating from one phase to another. Once that credit card, good credit scoring card is in place, I think that will go a long way in actually assessing the capacity and the ability of the customer.
Oh, thank you very much. My panelists have done an amazing job. We should give them a round of applause. Thank you so much for the enlightening, so much insightful information here. Big thank you.
Thank you very much for the question. Thank you very much. So another round of applause. Thank you very much. Thank you. God bless you. I wanted to ask you a question now. What advice you understand do you have for your colleagues to understand finally, right? You having this thing, take responsibility. You are a chief risk officer. The way and this report, you know what I'm talking about. Now that you are facing
once again, I think the advice I have for my colleagues here is, I've discovered, I just assumed the leadership of the department, and one thing I've discovered is that there's this apathy for risk culture